Hey, this is David for BigBits. Hope everyone's having a great day. I am kind of tired. I just did a live stream on TradingView. The restream feature didn't work here on YouTube, so running back pretty much the same stream I did there, except here we're going to talk about a little bit more. I wanted to make sure mods at TradingView were happy with the topics we're discussing. I'm not sure they want me talking about everything that I'm talking about here on YouTube, but I did want to go ahead, and the first things I wanted to discuss were new indicators. We have the volatility weighted moving average, which you can see on the chart now. That was released today. That one is publicly available, so if you go to my profile, you should be able to find it in the script section, and you can add it to your charts whenever. Now, I'll go ahead and tell you, I built this one based on a theory, and I'm not sure the theory is going to play out, but the indicator works as I expected, and I'll explain to you how that works in just a moment. We'll talk a little bit about how the code works, because I know there's a few people who have asked on how that actually works. I didn't want to post the code on this one because there have been some people taking my code and reusing it kind of as their own. And this one I thought was kind of unique, so I didn't want to share the source code on this one. But I will tell you how it works. But the people who've been taking my code probably aren't smart enough to figure out how to take what I'm telling you and build their own indicator out of it and try to sell it. So I think we'll be good just talking about it. But there was also the stochastic weights advanced. I did a whole video on this one here on YouTube not long ago, but I am going to show you today how I've been using it and how I think the best way it's worked for me has been. And then we'll talk a little bit about some TA while we're on TradingView, and then I'd like to discuss some crypto related topics. And I know I added Coinbase IPO in the title of the video. I'd like to talk about that, the implications of something like that happening to the crypto industry, whether or not I'm going to get into a Coinbase stock or any other sort of stock that's crypto related, and then also see if there's anything else interesting that's been going on. I know last week or the week before we had the CBDC hearing essentially with the Senate committee, and I think that's about it. There's one more thing. The trade alert responder application, it's doing really well. We have the webhooks working for multiple endpoints off of a single alert. So with a single TradingView alert, you can actually send out multiple webhooks, and each webhook can have its own values respectively. It can send, the first webhook could send out JSON, the next one can send out nothing at all. It's completely customizable. It's really cool. I'm excited to share that when we ever get around to that. But for now, we're going to start talking about the volatility weighted moving average, then we'll work on to that. I'll probably take a short break between the major topics. I'm getting kind of tired of talking already because, like I said, I was on TradingView earlier. I'm having to drink some water now. Hopefully everyone can hear me just fine. I've got a little bit of chill music playing in the background. Hopefully it's not too loud, because when I take a break, I'm going to leave that running, and then I'll come back after a few minutes when that happens. But I'm not going to take a break just yet. We're getting ready to get started and talking about these indicators. Let me get a drink of water, and then we're going to get started for real. So first of all, if you have any questions about these indicators or you want access to them, just leave a comment in the chat, or you can contact me directly on TradingView. All right, so the volatility weighted moving average, let's zoom in on this here. You can see it looks just about like any other moving average. That's because it really typically is, except that it tries to weight the moving average. Basically, it tries to increase the change or the velocity of change within the moving average based on the bigger moves. And I'll explain to you how this actually works, but simply put, exactly how I've told you already, the bigger the moves, the more weighted the moving average is pulled down. So this is a weighted moving average already, but the candles are weighted even further based on the amount of volatility in that candle within the recent amount of candles. So it's kind of an odd idea, but essentially the theory behind it is that the higher the volatility in the candles, the more it would impact the moving average and the quicker you could identify trends. Now, I'm not sure it's actually working out that way, but that is the theory, and I'm going with that for now. Let's go ahead and take a look at some of the settings so you can kind of see the differences. Now, I mentioned that it's going to be weighted heavier based on higher volatility. Actually, there's 3 different options for the volatility. You can choose between high, low, and average. So with high volatility, it values these large moves very much. With low volatility, it values the consolidation periods much more than it does the high volatility periods. So the smaller the range on the candle, the more weight it gets. And the average volatility values candles that have average volatility. So you can see it does play an impact on it, and I've played around with some of the settings on it. It's actually kind of neat seeing how the volatility actually impacts these figures. So if we were to add this same indicator on here 3 times, we could look at it with the low and the high and the average all together, and you can see the differences very clearly. So this is the high volatility. We're going to leave it on there as this one's easier to explain. Excuse me. Like anything else with these indicators, there is a look back period for the moving average. That's just going to tell us how many candles to look back for the price to calculate the price. And we are going to weight that price. But the price that we're going to use to weight is based off the last this many periods. So we also have a length to measure volatility. So when we're talking about comparing the volatility of these candles to determine how to weight them, this is how far back it's going to look to determine the volatility value of the current candle. So this large candle here, if you compared it to the last 10 candles, it has the highest volatility, so it would be weighted higher than any of the candles before it. Now, if any of these candles were to be included, say we were to go back 30 candles, it would still be the same way. But pretend we started up here and we went back 50 candles. This one would be weighted the most out of all of them, and the most recent one wouldn't be weighted as much because it doesn't have so much volatility. If it only went back 10, that candle wouldn't be included. So that's the volatility look back essentially. Now there is something what I call volatility divisions, and this is kind of hard to explain, but I can kind of show you. We'll go down to the code to kind of show you what's actually going on here. If it'll let me. There we go. So essentially what we're doing is we are first calculating the change in the candle, which is the volatility. So we're taking the high minus the low by default, and we're getting a percentage change based on that. You don't have to use a percentage, but I like to use those when I'm troubleshooting, so it helps me. Then we go to our volatility look back period, and we get the highest amount of change and the lowest amount of change. So if the lowest was 1% and the highest was 3%, your maximum change is 3, your minimum change is 1, and then your change range, which is your maximum minus your minimum, is 2, because the difference between 3 and 1 is 2. Okay, then the change range segments, the segments are actually the divisions that I just talked about up here. We have 10 divisions, so it breaks up that 2% range into 10 different divisions. And for every division it qualifies in the correct direction, it's weighted more heavily. So that it's kind of confusing, but essentially when you're weighting higher volatility, the larger the percentage, the more value it gets. So for every segment of volatility that it qualifies for, it gets weighted more. And the candles that get weighted the absolute most get this sort of bonus or this peak volatility weight. This is an extra 10 points to it. And essentially, this helps it move even faster. And I left it as a setting because you might not want to use it. But what I noticed was when I didn't add extra on top of the most highest valued candles, that it wouldn't move enough. So I had to add that on there to give it a little bit more boost. Now, that is how you do the high volatility. So let's go back to our segments here. we have our 10 segments. Low volatility would obviously work the exact opposite way. You would look for candles that were at the lowest level of change in the volatility, and you would weight these much more heavily and give this one the peak volatility. So that makes much more sense, but you're probably wondering, how does average volatility work? Essentially, candles within the very middle of that range get weighted much more, and that's how you get the average volatility. Now, there are a couple of other options here. There is the moving average type, and what ends up happening is that the moving average that gets plotted on the screen is either looking a lot like the SMA or the WMA, the simple moving average or the weighted moving average. And that's just due to the nature of how these are calculated. They're going to look a lot like the simple or the weighted moving average, except the candles are going to be weighted slightly different or more. And the theory was that weighting the candles more or less based on their volatility could help us see when a trend is about to change, because volatility will increase on a breakout. So like here, if we were to compare it to the actual 50 weighted moving average, the price should be similar. And let's actually do that. Oops, that's the wrong thing. Let's use our fancy moving average here, and let's set this to the 50 weighted moving average as well and give it a different color. Okay, so it has a red color, and I'm going to make sure, yes, that this is the whole moving average. Excuse me, I selected the wrong one. Weighted moving average. Okay, that's much more like what I expected. The green line is our volatility weighted line, and our red line is our regular weighted moving average. So you can see the higher the volatility, the quicker the weighted moving average moved. But you'll notice back here that it started moving slower. That's because the most recent candles at this point had much lower volatility than those back here. So these candles were being weighted more, their price was more important. All right. That's how that works. And the theory was, for example, here, when the lines converge and you're in consolidation, that when one of the lines breaks in a certain direction quickly, then likely that's the change of trend about to occur, because the volatility is breaking out in that direction. So hopefully that makes sense. That was a pretty quick change in direction there. And then it continued to move down. Of course, it's hard to predict something like this actually happening, but that was the theory behind it. And there's also the theory behind the low volatility, which would hopefully represent weighting consolidation more. So if we're going to look at the low volatility, okay, it took it a while to calculate. There's a lot of math being done on the back end to do all this, but you'll notice it's much slower. So actually the weighted moving average itself started breaking out away from the consolidation quicker. So that was another way to do it, and I've thought about actually using different moving average periods. So for example, we're using a 50, so we would do like a 45 or something on the actual weighted moving average, and you can see that it started moving even quicker at that point, but then the consolidations don't line up. So I'm not entirely sure how I'm going to use this one yet. The theory kind of makes sense, but quantifying it is really hard to actually help identify these trends. I was hoping it would be a lot more obvious. It's not. So there's still a lot of work to be done here to try and get this to work right. But hopefully those of you who are watching actually kind of understand what's going on there now as far as how it actually calculates that. And like I said, it just weights the candles based on their volatility. It's exactly what it sounds like. And if you didn't understand that fully, you can reach out to me through private chat, or you can leave a question here in the comments or something, and I will try to get back to you with some more information. But hopefully that'll take care of it. Alright, so let's forget about that one for now, because I'm not sure how that one's going to go. We have already talked about the stochastic weights advanced, but what I did want to show you is how I've actually been trading it lately. So let's go over to the Ethereum USD chart. One thing I want to show you is that I have been trading the 1 versus the 5-minute chart. So you'll see here there was a bearish divergence on the 1-minute chart. So essentially what I've been looking for are these divergences, maybe not necessarily one called out specifically, but I've also been looking for kind of ones like this to where even the indicator doesn't recognize them, but you can recognize them as divergences to a degree. And then I want to see the corresponding stochastic weights advanced value on the 5-minute chart also be on the same respective level. So for example, at this divergence, this is a bear divergence, so I would want to attempt to short or sell here, and I would want the 5-minute stochastic to be very high. So it was, and this actually would have been a point where I would have entered a short or a sell, and then I probably would not have tried to have taken profit until there was another crossover. And this was one of the ones that actually would have worked out really well. Like all indicators, there's a failure rate, but I seem to think that the divergences on the 1-minute chart aligned with a high value on the 5-minute chart or a low value respectively tend to work out a lot better if you're trying to scalp as opposed to just watching the 5-minute chart. So for example, if you were to watch the 5-minute chart, you would have gotten a really good bull divergence here. Let's go back and look at our 1-minute chart at the same time. Okay, so what you're seeing here is you actually had a bull divergence, and you had a very low, almost met our requirements for a very oversold stochastic. So you would have looked at the 5-minute chart and you could have confirmed that yes, that is a divergence, and we have very low values on the stochastic on the 1-minute. This is actually probably a pretty good chance to enter along here, and it was. There is also the very oversold value here. So if you were trading the 1 and the 5-minute like I told you, and you're using one and the other to confirm, you would have been able to pretty much call the bottom on that one, because the 5-minute stochastic is super low. And then with the divergence here on the 5-minute, if you looked at the 1-minute chart, you would have seen it was super low as well. You pretty much could have called that bottom as well. So that's how I've been using this indicator, and it's been working really well for me so far. Hey VJ, I'm doing good. How are you doing? Thanks for stopping by, man. If you got any questions, just let me know. But yeah, this is really good, and to me, I think it's been turning out really good because of the scalping. Looking at this on the 1-hour charts, it's not really been quite as good. And then there's also, of course, these dumps that occur like this one. And let's go back and look at this one, because I was actually active when this one was occurring. So for example, you could see the price continuing to go down here, and you hit a pretty much a very oversold level on the 1-minute, and you probably would have wanted to long here, and I did, but because the price was continuing to go down, I stopped out. Then I noticed there was a divergence here, and we were still very low. But one of the key things that we also have an alert for is actually a crossover within these zones. So when the price crosses over or under within these zones, you can actually get an alert to trigger for that. So when that alert were to trigger and we were low here, then that would have also been a good time to get into a long. But this whole dump yesterday was awful. I managed to basically make a tiny profit out of scalping this, and it's kind of sad because I had to use a stop loss here. And then when I went to go long in through here, it was around here, I think I actually got an order in. I wasn't able to take much profit because the price just went sideways essentially for hours after that. It was kind of odd seeing it, but if you would have actually zoomed out to the daily chart, you would have noticed that was actually the mid Bollinger Band on the daily chart. So that was just Bitcoin kind of holding that and Ethereum holding that. how to set buy and sell alerts on this indicator. Okay, so you can go to, let me zoom in here. You can go to your alerts on TradingView. Go to add an alert. Oh, they're doing maintenance right now. I forgot. Let me refresh and see if that helps any. Let me make sure my chart's saved. Yeah, and if anybody else wants access to this indicator, I'll give it away for at least a week and see if you like it. You just need to give me your TradingView user ID and I'll give you access. So let's go to add an alert. Okay, so it was just because I hadn't refreshed. They're out of maintenance now. Go to your condition and then you choose the indicator, so stochastic weights. And then there's 6 options right now. I think I'm probably going to add 2 more. I keep forgetting which ones they are, but you can essentially trade based on whether or not the K value is oversold. That's the blue line. So when the blue line goes below the very oversold or above the very overbought levels, the first 2 could trigger. The 3rd and 4th conditions are the crossovers while oversold or overbought. So I forgot to zoom in. I'm sorry. So we have the very oversold level here, the green line, and I hope I'm not in the way. Okay, I'm still trying to get used to the zoom feature, guys. I'm sorry, but you can see it went very oversold here. Well, very close to being very oversold. If it went below that green line, you would have gotten an alert that it was very oversold. So that's what that is, and this line is adjustable if you wanted to do that. Now, the crossover while oversold is essentially the same thing, but it's anywhere within this green region the blue line crosses back over the purple. So I believe, let's see, that would have been on this candle first, so that would have not been a great one in this particular case. On the 5-minute chart there was another dump yet to come, but the other alert that you get is the bear and bull divergence, which is this one, and these do not repaint. I designed the indicator specifically not to repaint the divergences, and that's why you don't see a lot of them, because a lot of other indicators wait and then they paint the divergence and it's too late. So I tried to be as strict as possible and make it to where it wouldn't repaint and yet it would still find divergences, and I think it does a pretty good job of that. It's hard to actually do that. And that is the 5th and 6th alerts that you can choose from. So there was one more, and I remember what it is now, that you can add as an alert eventually, and that is the very quick overbought, or the very overbought quick divergence. So this one's a little bit confusing, but essentially this helps us find divergences that may or may not be identified with the line and may not have thrown that alert originally. So it will require that within the last 50 or so candles that you had a value go very overbought or very oversold, and then the price is higher and there's a crossover lower than that crossover, but it's above like 50 or 60 on the stochastic. So it's a bunch of rules in there to try and get it to capture a divergence after a very oversold or very overbought period of time. And that is because, like I said, I made these divergences down here at the bottom of the screen, I made these very strict, so I still wanted to catch more of the divergences, so I added in the very overbought divergences as well, and we'll have to add in an alert for that. I'll just have to do an update on the indicator itself at that point. Whew. All right, yeah, my throat is getting sore, man. Not really, but I'm getting kind of tired of talking. I'm not used to talking hours at a time. And for those of you who weren't here, when I started the stream, I had just finished one on TradingView, and I pretty much talked about the same stuff there. So I've had some practice on this already today, but I am going to take a quick break. I'm going to get some more water, get up and stretch, and we're going to come back, and then I'm going to talk about a little bit of TA, and then we'll talk a little bit about some of the crypto news, Then we'll probably have another break after that, and then we will go and discuss some of the trade alert responder stuff, which is the application I'm working on. If you haven't seen it, you'll be really interested to see this one, I think, because it's what's spitting out all of my trading alerts on Discord. So these guys, it's spitting out these alerts on Discord based on my TradingView alerts, and it's also doing my Twitter alerts, and it's an application that I wrote. We've got it now to where it can do webhooks, multiple webhooks for a single alert, so that's really cool. But yeah, I'm going to take a quick break. You're still hopefully going to hang around, and I will be right back. Okay, so apologies about the break. I had to get up and stretch and get some water. I'm back. Hopefully, you can see what I wrote on the whiteboard the newest entry at the bottom there on the far left. That's going to be the answer for the next update on the giveaway. So for those of you who are watching, you're going to be able to get that question right. It's worth a lot of entries, and this giveaway was $50 in Bitcoin, and it's going to end at the end of the month. So hopefully those of you all who are here have a better chance at getting that one. And if you can't see it, you can't read it. It's IPO, and we are going to be talking about the Coinbase IPO here in just a moment. I did want to bring up my ideas chart to talk a bit about the TA that's going on right now, and this is the S&P. We're on a weekly. I want to go back to the daily. Okay, so essentially what I thought happened yesterday might just be a shakeout, and the reason I believe that is because up until that dump, everything looked very bullish. All of your indicators were starting to turn up. Altcoins were starting to do very well, and this is in reference to Bitcoin, by the way. It looked like everything was going really good. You had just bounced off the midday Bollinger Band. You closed above the 50-day. Everything was looking really good. There was a lot of momentum, but then everything kind of fell down yesterday. But it still kind of held the mid Bollinger Band, and we're going below it today. But we have been trading a lot in correlation recently with the S&P, and what is very bullish in my opinion is the way this has acted as long as it closes like this today, is that it bounced very well off of its mid Bollinger Band, and it closed without another engulfing bearish candle, and it was above its mid Bollinger Band, and then today it also tested that band and it's green. So to me, the S&P looks like it's about to continue back up due to these things. Also, the moving averages and the 100-day is about to move back up as well. And to me, that means that Bitcoin is either going to continue to follow the trend, or it's going to continue to grind down here until it finds its support as well. It has not touched the 100 or the 200-day moving average since the 10th of May. And it didn't even touch it then. It just kind of got close. So it's been a long time since we've tried to even test those as support. So I thought we were going to come back down to those, but it may not. That's why I've circled this. I kind of thought we were just going to slow grind down to those. It looked like things were about to change, but it didn't. I'm definitely not in a hurry to sell any Bitcoin just yet. I still think we're in perfectly reasonable shape to break out of the multiple year triangle that we're in. And I don't want to zoom out because I've got the Bollinger Bands on, and it's just going to mess up the scale. But I'm sure you all have seen the charts if you're following anybody else talking about Bitcoin or crypto. We're pretty much on the precipice of being able to break out, and I think it's like if the price can get to 10,000 or 10,500 again, something like that, that it's out of that huge triangle, and that it would essentially mean bull season's back on. But we're still kind of ranging here. We're in the middle of these. What is looking good, and I've mentioned this before, is that you got the 50 above the 100, above the 200, and all three of those are moving up. So that's really good. Right now, we're just a little worried about the Bollinger Band and closing below it and working our way back down here, which could in turn lead the 50-day to come back down. But as long as the 100 and 200-day keep moving up and the 100's above the 200, we can get an increase in price that would just turn the 50 and the 20 back the way they should. So it's not a huge deal for those as long as they hold as support. All right, so let's see. I wanted to look at this also on the weekly because I talked about this when I was on the TradingView stream. The weekly, you can see pretty much the same thing, except on the weekly, you have the mid band getting ready to be crossing over the 50 week, and then you're going to have the mid Bollinger Band above the 50, above the 100, above the 200, and I don't think you can ask for a better bullish setup than that to really start propelling a new trend. So this is also one of the reasons why I thought we were going to come down and test like 8.4 or whatever it was the 100 and 200 day were, was because we still had the 50 and the mid Bollinger Band there. What I kind of thought was going to happen was that we were going to get a wick down to the weekly band and bounce up, close above the 50 week, and then continue moving up, but that's not going to happen. Let's take a look at BLX because it goes a lot further back, and I want to take a look and show you all the last time that this actually occurred. And my goodness, I hate dealing with these Bollinger Bands here. Just have to zoom in. So this is 2016. This was the last time that we had the Bollinger Bands above the 50, above the 100, above the 200, while they were all moving up, which was probably around in through here is when that occurred, in June of 2016, when they were all moving up. You'll notice that the 100 was still moving down here, so we didn't just look at the intersections, but right here, when they were all moving up, that did not change for quite some time. I really hate the Bollinger Bands. All right, let's switch this back to a regular one. So you'll see they did not cross over at any point until that parabolic run-up was over, and then you had the crossover of the mid band over the 50, and then they just kind of continued to cascade down below each other. Well, not really. The 100 didn't go below the 200. So you have that in the 50, and the actual price didn't even close below the 200. So a lot of really good stuff, but you're about to see for the first time the 50 above the 100, I mean the 20 above the 50, above the 100, above the 200, all moving up, and you haven't seen that since 2016, and I'm pretty excited about that personally because I was just fortunate enough to get into Bitcoin at the beginning of 2017 by accident. So I was able to reap some of the rewards from that bull run, but hopefully we can all at this point be able to reap the rewards of another full cycle bull run, which is what I hope everyone here can have. Okay. And looking back at the S&P, oh, by the way, this is that multi-year triangle I was talking about, and it doesn't look the same on the regular chart. Let's take the Bollinger Bands off. Yeah, you can see it a lot better here on the logarithmic scale. See, the price would have to be actually more like 11,000 right now to break out of it. But if you consider we were just at 14,000 a year ago, it's reasonable. All right, so as far as the weekly on the S&P, I mean, it doesn't look bad at all. I mean, it's ridiculous how quickly it recovered from the huge drop there on the weekly chart itself. Excuse me. But it's also going to have the mid Bollinger Band come up, and I've been saying this for a while. I think it's going to touch the top band, and then it's probably going to come down some, which means it's going to test close to these highs, these all-time highs, before it comes back down. And by testing close, I mean it might get back up to the full body of that candle, but I wouldn't count it out that it stops short of that. But as long as the price stays up here, anywhere above the 50 week, you're going to end up expecting the Bollinger Band to cross over it, and then for it to just kind of continue on. And honestly, it just looks like it's ridiculous. Like, it just doesn't stop. There's nothing that can stop it. It seems like stocks only go up, right? It's really wild. But this is also a good time to point out that I like my stochastic weights advanced indicator on these weekly and monthly time frames, more specifically the weekly, it's been working out pretty well. More specifically so for stocks. So if you're just following the S&P and you're doing a long only strategy to where you're accumulating cash and you're waiting for a good opportunity to go in, well, when it goes anywhere oversold here, it seems like a pretty good time to go in. So that was at the absolute bottom of the drop from the coronavirus, and then if you go back, it doesn't do that again until back here in the financial crisis of 2008. And then if you really wanted to get in again, say you spent all your money here, if you were saving any more, you could have got in again on the divergence. So that is really cool to see on the weekly chart, that it's really good at finding a bottom on the weekly, but it's going to be hard to tell if we enter into a long period of a bear market there, which doesn't even seem possible just the way things are going. Bad news and all, it just continues to rip. Let's look at the monthly here. I wanted to see if there was anything interesting here. Oh, now that is interesting. There was a bearish divergence on the monthly chart on the S&P. So that is interesting. All right, I apologize about that. My phone was ringing. I don't know if you could hear that. I'm going to mute that thing. Anyways, there was a bearish divergence there on the monthly chart, and that's only because of the coronavirus crash. It would not have crossed down here at all given that. And what's crazy is it's going to cross back up here this next month. So it's absolutely wild what's going on right now. And then of course, if you did wait for the stochastic advance, that divergence that we talked about on the weekly actually would have occurred from here to where the crossover actually occurred. So if you do recognize it's a bear market, you want to find a good time to get in, I personally am going to be using my stochastic weights advance, and of course I'm not a financial advisor, I'm not going to tell you to do it, but to me it looks like I'm going to be doing just that if I have to sell for a bear market, to wait to get in something like that. And honestly, the same thing goes for Bitcoin. Anything low, a low value on the stochastic weights advance, just gets destroyed. So if you get down here, that was the absolute bottom there. You got a crossover. Any crossovers below 40 seem to work out really, really good. And let's see, you had another one here that was pretty much the absolute bottom as well. So on these longer time frames, it's really good. But of course, I'm sure a lot of indicators are really good on long time frames like that. Alright, so I wanted to see if there was anything else I wanted to get into. First of all, I need to go back to the daily. Oops, that was the 2-day. Want to get back to the daily, and I wanted to look at a couple of the coins that we look at on this channel pretty often, and that is basic attention token, which seems to be having a pretty bad day right now. It's possibly turning down, which is unfortunate. We'll see how it closes, if it can maintain the mid-Bollinger Band and continue turning up. Honestly, I'm seeing some signs of exhaustion on some altcoins like this. And when you see these, when you see signs of exhaustion on a bunch of altcoins, it can mean that the entire market on those could be indicating that that is also what's about to happen to Bitcoin. So back here, this is versus Bitcoin. It looked really well, and it did bounce. It's amazing how it just held that line perfectly for so many days. but it definitely looks like it wants to come back down. All right. So I'm not too happy about that. Let's go to the weekly. Similar here. I definitely think that it's coming back down a little bit, honestly. It did hit the 100, which was a target that I had. But what you're going to hope for now, if you're like me and you're holding on to, you're going to have to hope that it holds its mid-weekly and the 50 and comes back up to that 100 again and can beat it this time. All right. Let's take a look at Ethereum. That's the weekly. I mean, it honestly looks very bullish still on the weekly chart. It's got just about everything going for it. It's already tested the 200. It's came back down, and it's on its way back up. And as long as this candle finishes green for the week, it's still going to look good. I forgot to look at it on the daily. Daily, it's kind of looking like the other ones to where it's wanting to show that downward momentum. But I think today is pretty important. If these can finish green, or at least with a long wick, it'd probably be really good. Let's take a look at it versus Bitcoin now. So I'm a little concerned. It's got a very high stochastic here. Smooth RSI, turned down, that turned down. I'm not too thrilled for it versus Bitcoin right now. That doesn't mean a whole lot. It could just come down a little bit. I mean, obviously it could not come down at all, but I don't personally like it a lot. But we did just break out of the dominance on the altcoins, so it could just be another retest of that. And you'll notice that it does have all of its moving averages pointing up. It looks really good. And that's about all you need to know. It just looks really good long term. And going back even further, it's got a lot of upside if it can continue to run. And for me personally, that'd be great. And this divergence actually looked really good right here. It's like the perfect bottom on that divergence. And you'll notice it didn't throw one here. It would have entered too soon. Look at the weekly versus Bitcoin. Hey VJ, you got a question? Versus Bitcoin on the weekly, it is stuck between the mid and the 100. Yeah, I mean, I think if you see Ethereum close above the 100 versus Bitcoin, it's going to shoot up like crazy. Because this is a key resistance area, and that's a key moving average resistance. Yeah, if it breaks that, it could shoot up. Like you see these candles. I'm not saying it'll get up that high, but you get the kind of idea, the volatility that it could bring to the upside if it were to hit. All right. I think I'm done. I don't want to do any more. I'm getting kind of tired of talking, but I did want to mention the Coinbase IPO. Let me bring that news up. So this one is kind of all over the news. It's in a bunch of normal news cycle places as well, but essentially they're wanting to do their own IPO and get listed on an exchange. Well, there's a lot of mixed feelings about this out there, and that is due to the fact that it is a crypto business, but yet instead of tokenizing and becoming a security through a token, they are going to go a traditional route and become a stock. and it's kind of different than most of the exchanges who kind of have their own coin. Although those are supposed to be utilities and aren't supposed to represent stock, that's kind of how people take them as and how they treat them. So to see Coinbase do this is kind of a slap in the face to crypto and the spirit of crypto. And then you've also seen them try to work with the government to help them track down people with the blockchain analytics and things like this. So there's some concern about that. But what you'll note is that this is a bridge, and that's all Coinbase has ever been, is a bridge onto the public, the larger public, not just the crypto community. Coinbase is that easy exchange for people to get on and just buy some really quick. It's where all the normies went, the Coinbase moms of 2017. That's where everybody went to just pick up their Bitcoin, and honestly, that's completely fine. The world needs something like that. But what's going to happen here is they are going to be a bridge into the traditional finance system as well. It's going to be interesting how it works, but essentially you're going to be exposing the crypto industry to all traditional money. So you're going to get people who pump a lot of money into Coinbase, which wouldn't otherwise go there. What do you think of the level of Bitcoin? I don't know. I made my 10-year prediction of 200K, but as far as the next bull cycle, if you're asking about that, I would guess 50 to 80,000. I know it's a huge range, but it's impossible to say. And it typically goes up about 10 to 13 times at least every cycle. 10 times the low, I should say, of the bear market. So the low was 3,500 or 3K. So 10 to 15 times that would be 30 to 50,000. I think that's reasonable if we hit another bull market. But anyway, back to Coinbase being that bridge to the traditional system. It's going to introduce a lot of money from the people who run these hedge funds that are too afraid to touch crypto, but they would be willing to invest in a stock of this company. So it's going to be interesting to see that they are going to be willing to touch a stock and not that. And I'll tell you, I will be trying to get my hands on some of it. I don't think you can really do this anywhere else right now. Get your hands on such a big, well-known company within crypto in a traditional system. I think people are going to flock to it. It's going to get that first mover advantage into this area. And the thing is, they could still do a token. It's not like they can't do a token and have stock. I don't see why they couldn't. They're two different things. Stock is a security, and you can have a utility token. So like you could have your own exchange token. So if the laws and security regulations change, you could see Coinbase have a stock and then eventually have their own token as well, although I'm not going to hold my breath for the token. Okay, so I'm going to take one more break, and then we're going to bring up Trade Alert Responder and talk about the webhooks with the alerts on TradingView. And then I think we are going to call it for the stream after that. And I think we might do some other stuff this weekend, and I might publish Trade Alert Responder, but I'm getting kind of tired. I've had a busy week here, but we shall see. But yeah, once again, taking a break right now. I'll see you all in just a few minutes. Alright, my hat might be crooked now. That's alright, we're back. Okay, so I said we were going to bring up Trade Alert Responder, and we are. Let's see, I don't even have Visual Studio open. And yes, it does take this long to load. There's a lot of code. There's a lot going on. Alright. Oh my goodness. There we go. Alright. Well, no, maybe it's still loading. Alright, so I'm going to run the application and show you all kind of where we're at now. I've made quite a bit of progress in the last week on some of the key features that we were seeking that are in the projects on GitHub that we are looking to apply. And honestly, we'll have to do another version before these are available to everyone. And I was kind of hoping to do that today, but I'm getting kind of worn out. I don't think I'm going to get around to publishing a new version today. But everything's looking great. The alert scanner is up here to grab the alerts from TradingView. But you will also see there are some new alerts here, but most importantly, actually let me do this. I have added a few new features here, and that's not the one that I need. I actually need this one. So we have added a few new properties in our bot message, and we have webhook URLs, webhook messages, and webhook JSON. And essentially the way I've done this is you can, in these segments, you can put as many of these URLs and as many messages as you like. Ideally, you would have one of each. So you'd have one URL, one message, and one is JSON. And you would number those respectively within each segment, and it will send out those messages. And I did test this, and it did work. It sent out the webhook notifications to both of these URLs, even though it's just one TradingView alert. And that is amazing. I don't know if anything else does that right now. So that is really cool. And what's even better about that is this is a client application, so these are unlimited. You can do as much as you want. As long as you're within the character limit here on the TradingView message, you can do just about whatever you want. It's really cool. But in order to get these set up, it's actually quite simple. We have our webhook alerts here. I have those enabled. You can click on the settings for it, and you can see I still need to reshape this form some, but give me just a moment. I'll show you all our test and how that actually worked. It's actually pretty exciting. All right, pull this onto the other screen here. All right, so these are all the requests from earlier, and the newest one will now show up on top. And what you're going to see is I already have the URL up here. Yes, that's the correct one. I can put whatever I want into here, and it should show up as the message, and then this will tell it whether or not it's a JSON message or not. So let's try this out. Let's put in here live stream test, and we're going to send this as not JSON. And I think I have to actually hit in here twice before it'll go through. Yep, okay. There you go. There's our content. It is live stream test, and it's saying it was JSON. I think something is maybe backwards there. No, okay, that's just a setting over here. So that's completely fine. That's not an issue. But if I were to say that it is JSON, we'd of course have to put in a JSON object like I don't know. I don't know, let's do something like that, and we'll send this one. There you go. There's our message. That's probably not a JSON object. I don't work with JSON a whole lot, honestly, so I couldn't tell you. I know it's something like this. Usually my data is list-based and doesn't use JSON, which I know a lot of people use JSON, so it's kind of embarrassing as far as a developer is concerned not to know the actual formatting there, but that's what we've got. That's how the webhook alerts work. You add them to your alert, as many as you want. You enable the alert action and it'll send all those out. And if you're curious as to why it is useful to be able to apply multiple webhooks to a single TradingView alert, let's just say you can enable and you can actually control multiple trading bots with the alerts. So a lot of people use something like 3 commas to set up their webhook messages. Here you go. Here is their stuff here. You can choose webhook URL, and then you can put the message in there, and that's what we're doing. But with our stuff, you can actually send this same message to 4 or 5 different URLs. So that means technically you could control 4 or 5, 10, 20 bots, depending on the character limit on TradingView, with a single alert. So it can enable a lot of powerful actions here. Like if you're trying to trade for other people, this is how you would do it. You would set up a trading bot that would manage their money with an API. Then once you have access to set up their trading bot for them through your bot, what you do is you set up these alerts for your bot. Then you send off all these webhooks on the single alert, and each alert would be for each account. So you could manage 5 accounts at once with a single alert or more. It's pretty cool. I'm excited about this one. I'll have to add documentation for this later, but that's how that's going to work. It's pretty cool. And then we have also added a test screenshot. I need to rename this, but essentially the alerts, if you haven't seen them, send out screenshots of the chart if you have a URL in there, and you'll see one here. You know, this is what it should look like. It takes a screenshot of the chart that it's associated with. That's exactly what it's supposed to do. And you can actually test that now to make sure that your URL and your crop settings will actually work correctly. So let's test this one, and this should take a screenshot of that chart, and it does take a second and there is no loading information, so hopefully it'll actually work. There we go. It finally came through, and this is our watermark, and if you click on it you can actually zoom and see the actual image itself in full resolution. So once we get that done and rename this and add in the loading imagery or something just to say that it's taking the screenshot, then I think that'll be ready. Of course, let's take the crop off, and now let's try the same link, and it should take just a minute again. So now you can see. You can see how the cropping worked. It went in here and it took just the section that we wanted, cropped it out, and now with the actual screenshot without the crop, you can see the difference that it makes. And I've already got the settings set to this to where I don't have to worry about that. And then just to show you that it works with other URLs, let's change this to my website, BigBits.io. Test this, give it a moment. It'll crop my site, which is going to make it look silly, but you'll get the point. You should be able to test it on any website, so no matter what URL you put in there, it should work. I'm really happy about how this has turned out. It's coming along really well. I still need to fix those things. Oh man, there was something else I needed to fix its alignment on as well, but that is about it for Trade Alert Responder. I know it doesn't seem like a lot, but there is a whole lot going on behind the scenes, and those are typical error messages that I get. They are there to just make sure that everything closes down correctly if it didn't close down correctly already, and it'll throw an error if it did close correctly. So it's kind of confusing, but essentially make sure that the resources get disposed of instead of staying in memory and clogging up your system resources. And it's okay to throw an error message in order to make sure those get closed. Okay, so that is it for the active session of me doing the live stream today. I'm probably going to be done now, and what I'm going to do is I'm going to do something a little bit different. I am going to set up a monitor over here on my third screen, and I believe I'm just going to have it play some tutorial videos, and we're going to have the tutorial videos playing for a while, and I'm basically just going to leave those running and redirect people to the PineScript tutorials playlist or something like that, just in order to keep the stream running and get people to actually check out what's going on. So I'm going to be taking a break right now. I'm going to tell it to run its ads here on the stream. I'm going to be setting that up. So if you all want to dip, I completely understand. If you want to leave it up running in the background, you can. You're going to end up hearing those videos soon at some point, and hopefully everything will be good. All right, everyone, have a great day. just creating a ribbon based on the difference of the price from here and here, but instead what I did was I calculated a relevant period. So I had 5 lines between MA1 and MA2, and what I did was I calculated how many periods would fit evenly in here if I wanted to show 5 lines, and I used the periods to run the same MA calculation. Now, there's a little bit of a downside to that, but the ribbons aren't a super flexible thing like the other things we've been doing. There are some settings that we have for it. Let me go in here and show you. This is the styling settings. Just a moment. There's really only one setting for the ribbons, and that's just to show or to hide the ribbons. So if you have the indicator added and you don't want to see that, just turn it off. Now, one of the other limitations, and I'll go over why this is a limitation later, is that if you change either the type, the source, or the resolution for any of the moving averages, it'll get rid of the ribbons between it and its next associated moving averages. So if we change the MA1 to an RMA, you'll notice that there is no ribbons now between the green and the yellow line like there were before. That's because it's just calculating the midpoint. Now, if I had chosen to find the difference between those and just average out the price, then it probably could have done it, but it wouldn't have made a lot of sense in my opinion. I like the fact that it's different periods and that the ribbons can actually go out of bounds of the other moving averages that are in here, and that might not make a lot of sense if you're not too familiar with it, but it is the truth here. So change that, it'll get rid of it. Also with the close, because if you're calculating a moving average for all of these different lines, if you change the source for the data, then if this one doesn't match this one, how's it going to know what source to pull for the data here? And I didn't want to just assume. And the same thing goes for the resolution. All right, so now you've seen kind of how this works. You can see we've color coded it. It looks pretty nice in my opinion. So let's actually take a look at the code. If you're following the tutorial series, that's probably why you're here. So let's scroll back up to the top of the code. The first thing we added was another input for showing the ribbons. This is going to default to on this particular one. This is scripting tutorial 8. So you won't find this on the scripting tutorials before that. So you'll find that new here. And then let's also go down. I did want to mention there was a tiny error, not really an error, but more of a typo. On the plot titles for the forecasting, they were just labeled incorrectly. I fixed that in scripting tutorial 8. So if you're following along and you noticed that earlier, good catch. All right. So now we are on to doing our ribbons. Now, I like to make my code very flexible, and ideally, like I said, I would like to use loops to calculate these values because as you can see, there's a little pattern right here, and I increment up 1 every line here for each ribbon, and that's pretty ideal for a loop because I only have the one number that changes. The problem is that the plots don't like to operate within the loop, and it really doesn't really save me much coding resources to convert these 5 into a loop, whereas since these can't do it, it doesn't make much of a difference in my opinion. So I just left these out of a loop. I think eventually we'll get into a loop video if you're curious about those. It is in the PineScript reference manual. The for loops are, so you can go out and find that there. But you'll notice we calculate these values. Okay, we're doing the same thing we did before. We have to tell it the security so that we can give it the correct resolution, and we're going to use the type, source, and a new function that's called the ribbon period, or it's kind of abbreviated for it. It's R period, and this is how we're going to calculate what period we're going to use for these different ribbons, and this is what does all the magic of deciding how it's going to calculate the specific period. And we pass in the MA1 and the MA2, so we're doing ribbons between MA1 and MA2 first. And then this, okay, so these are the variables, the inputs into the function here. The next one is the step. So this is just the ribbon count, essentially. This is ribbon 1, 2, 3, 4, 5. That's really all that's for, but you'll see why it's useful in a minute. And then we also have the input for ribbons, which is how many ribbons there are total. And that's also going to be pretty apparent why we need that in just a moment. Now, that takes care of calculating the MAs, but how do we calculate the ribbon periods? It's really quite simple. It looks pretty complicated, but it is not. The first thing we want to do is we want to find the difference between period 1 and period 2. Okay, I'm actually going to break out my whiteboard here because it'll make a little bit more sense when you see the math step by step. It's kind of hard to see it when you're looking at a bunch of parentheses and you're trying to remember PEMDAS from high school, if you're out of high school, that is. If you haven't had an algebra class, then you might not even know what I'm talking about. So we're going to find the difference between period 1 and 2. So when we're looking at MA1 and MA2, that is actually 50 and 100 in the default values. So it would be 50 minus 100. And I hope you can read this. Okay, yeah, I think that looks right. Maybe. I'm not sure. But 50 minus 100, I'm just going to step through it. If it doesn't turn out right, if the text is backwards in the video, oh well. We're just kind of going through this out loud here. So we have 50 minus 100. That's actually a negative 50, okay? So the reason it's negative 50 is we're finding the difference from a smaller number to a larger number. That's why we use the absolute value. This way the difference is measured as a length, and it's always a positive value. So it's actually a positive 50 here. Now, we take that number, 50, and we divide it by the number of ribbons that we have. And if you'll remember, the ribbons were the last input here, and that's 5. We wanted 5 ribbons between here. But the thing is, if we just used and divided by 5 here, we would actually have our 5th line end up being on the other moving average. So we have to add 1 to it so that we have 6 groups. And it's going to be hard to see, but you'll have 1 area, 2, 3, 4, 5, 6. And I know it's really hard to see. I'm not zoomed in enough, but trust me, that's how it works. That's how the math goes here. All right, so now we divide that 50 by, in this case, 6. Okay. So let me pull that up and do that really quick because that might have a rounding in there. Yeah, 8 1/3. It's probably going to round down because I don't think you can do fractional periods on here. So we have 8 now. All right. But if the period was just 8, then it wouldn't be here. You know, we would have it much closer to the actual price if we were looking here if it was just 8. So we actually have to add the ribbon in for this. Now, to get them to show up between each other, to get them to be the appropriate value between them, we have to add the minimum value between period 1 and period 2. So in this case, it is 50. The minimum is 50. So we have 58 period moving average, which is this line just under the thick green line. That is the 58 period moving average. And it might not make perfect sense if you're just thinking of the math for the first time, but it worked out. And let's actually try this the other way around. Now, I don't recommend doing this, but if we were to set our MA1 much larger than MA2, it still does the ribbon. But keep in mind, the ribbon for those lines are always between MA1 and MA2. So I recommend, and based on the coloring, is that when you're using this indicator, you always keep MA1 period shorter than the MA2 period and the MA2 shorter than the MA3. Ideally, they'd be all on the same resolution, but if you're using different resolutions, you would want the quickest moving average first. That might be hard to understand, but if you're using like a 50 week here, or yeah, 50-week moving average, you would actually want that to be, that's actually the same thing as the 200 period, or close to it. Well, not even close to that. It would be, what, 357 times. Yeah. All right, my brain's getting a little fried right here, but I'm not going to go into the math anymore because I think I'm starting to lose my focus here. Anyway, we know how the ribbons work now, and as I've mentioned, let me change that back to 50. It works the exact same way from 2 to 3. Okay, now one of the things I did was I set the transparency on the lines really low or really high, depending on how you look at it here. The numbers kind of faded in the closer they got to the yellow, and faded out the closer they got to the outside, closer to the outer moving average. Now, well, it's outer in this case. It doesn't always have to be this situation. Let's see, was there anything else here that really stuck out? Stood out? No. The only other thing we did that I really need to point out, other than the, well, I don't think you even were able to see the colors. I apologize about that. Let me change that. Okay, so now you can actually see the transparency values. I really do apologize about that, but you can see they kind of faded in. Scroll down a little bit, one line at a time here, or try to. Okay, that's as far as it's got it, but you can kind of see what I mean. We set the transparency less and less. They're fading out as they go on. But that's what I mean by alpha color coded. Alpha a lot of times refers to the transparency. Okay, the last thing, and I keep getting sidetracked. I really apologize about that. But we also wanted to make sure we only show these when these conditions are true. So we need our input, that checkbox for show ribbons, to be checked. We need the MA1 type to match MA2, the MA1 resolution to match the MA2 resolution, and the MA1 source to match the MA2 source. We do the same thing for 2 and 3, and now we've got 5 ribbons. So now you might be thinking, that's great, but I want more. Okay, well, that's easy enough. You're watching the video, so I'm going to tell you how you can do more. It's pretty simple. Make a new line here. Under ribbon 5, name it ribbon 6. Just increase your step size here. That's all you do to calculate the value. Then do the same thing for the plot, and just change your transparency and the plot value here on the next line to ribbon 6. And you would just continue to do that on and on. Now, like I said, ideally this would be done in a for loop, but the plots don't seem to work very well with the for loops, so I'll just leave it at that for now. And honestly, I don't think you need any more than this. This is on a daily chart, and they're already fairly close together. I don't think there's any more that you would need, but it's always an option there for you. Okay, so if you like this video, please leave a like. If you like this series so far, please subscribe. We're going to continue it on. I've already had requests for people to do convert this into some sort of strategy, or also to do back testing and other features on TradingView, and we'll get to that. It's just going to take a little bit of time. I have to develop all this stuff. Every feature we add to it takes a little bit more time, and then of course I have to record the videos. So we'll get there. It just might not be tomorrow or the day after, but we'll continue to put out videos, and we'll get caught up. And thank you. I really appreciate you watching the videos, and have a great one. Hey, this is David for BigBits, and this is our 9th video in the scripting tutorial series, and we are finally on the topic of creating a strategy. Now, what we're going to be doing is we're actually going to be converting our indicator that we've been working on into a strategy, and having it place orders and create positions for us, and then we'll take a look at the back testing and the performance report of the strategy. So let's go ahead and get started. Now, the first thing I'm going to do, I'm actually going to hide myself here. Okay, so now you can actually see a little bit better. I know the text is kind of small. My apologies for that. But the scaling on the zoom here doesn't work real great. So if you're on a phone or something, see if you can zoom in. Otherwise, I recommend really watching on a desktop where you have higher resolution and you can see these things a little bit better. Anyways, now, the first thing we did to convert this to a strategy is we changed our original function, which was a study, into a strategy. And I've got the code in the reference manual pulled up here so we can take a look at what a strategy is and what all the different parameters are for it and what they do. We're not going to go over all of them. We're just going to touch a few for now so you can get an idea of what's going on. But before we get too far into it, that's the main takeaway. You change your study to a strategy, and then we can play around with a few things. You can see on the chart we have our entries and our exits. The entries are blue, the exits are this magenta, purple, kind of pink color. Now, once you have the strategy, you can open up the strategy tester, and here you can see a performance summary of your strategy. So with the default information and what I've put into the strategy, these are the net profit, and as of right now it doesn't include fees, but we'll get to that later. There's also some things you can compare it to: gross profit, gross loss, max drawdown, other information you can find important for your back testing, including Sharpe ratio. Just a lot of great information. It also includes your list of trades. Now keep in mind that when you're working on smaller resolutions or time frames like 15-minute candles, there is a limit to how far back the back testing goes. Now I'm just looking at the BLX symbol, which has the longest history of data, but it only has daily candles. So the back testing can handle the entire history of Bitcoin trading with that. So let's actually get back into the code. You can actually see our changes here with our strategy, what it has done. Now let's get into the actual changes here. Now we also had a short title and a title with our study. We also use overlay with that. But what we are doing now is we are adding a few new parameters. We are adding what's called pyramiding, a default quantity type, and a default quantity value. So let's take a look at what those are. Pyramiding is the maximum number of entries allowed in the same direction. Okay, we're just going to be going long, so we really only want to keep track of one entry with this particular strategy. If you wanted to do more than one, then you can. You just have to input the value in pyramiding. Now I can show you in a little bit the impacts this causes with our current strategy. We'll leave it how it is for now. We also had our default quantity type, which we chose the percent of equity, and I set it to 100 because we're going to be trading with 100% of our equity based on what you put into the back tester. And then for the default quantity value, was that the one? Excuse me. Yeah, default quantity value. That is the percent of equity that you're using. So that is the 100% of equity. So we tell it what we're going to use here and how much of it we're going to use here. And that kind of takes care of things. Now, let me pull myself back into the screen here. Okay, let's continue looking at this. Right now, we can see our list of trades. Let's go back to our Pine editor and let's see how changing the pyramiding impacts this. Let's set that to 3. This will give us up to 3 entries. We have to wait for the change in the strategy to be compiled and applied. So this will take just a moment. Okay, there you go. There's a lot more entries now. So let's take a look at our strategy tester. You can see there are a lot more trades. Look at our performance. We have a very high net profit. And we also, on the buy and hold return, that is if you are to buy at the beginning of the backtesting period and hold it, and that's your returns. So if you bought Bitcoin at the very start here, which would have been very, very small amounts, and sold it at the current candle, that would be your return percentage. And this is what you would have got if you played the markets since it began. Now, obviously, this has been highly volatile, so these numbers are going to be absolutely incredibly large. especially comparing anything to crypto over the last few years. You can get wild swings, and the numbers can be very high here, especially with a good strategy. So one thing I forgot to show you earlier is actually the overview, and this gets posted on the script itself, and for some reason I haven't updated here, but as you can see, let's let this load. Underneath the description, you see the performance overview as well. So let's go back to our overview here and see our equity is the blue line and our drawdown is the red line. And you have some other information here that you've already seen on the other page, but it's just a nice kind of dashboard or summary for your back testing. Now let's go back to our list of trades. Now one of the issues I had with the pyramiding is when we changed it to 3 and we allowed multiple entries, is that a particular entry was closed by a different exit. Okay, so these aren't really positions that are managed with like a unique ID. These are just entries, so it doesn't matter what caused them to open. Anything can close them if a exit is called. So let's take a look at an example here. The reason we entered along here at number 2 was because we had the MA1 crossover MA3, and with our default settings, that is a 50 over 200 SMA cross, and it exited, it closed the entry on a 1 over 2. Now it says 1 over 2, but it was really the 1 crossing under the 2. And the reason it says that is because in the script you're actually supposed to use an ID. And actually, let's go look at the reference here, because this will make a bit more sense. So when we close, you're technically supposed to be able to use an ID of the identifier for the entry. So if we had entered with a 1 over 2, based on the documentation, it should close when you have a 1 over 2 as the ID or the identifier for your close. But for some reason, it doesn't work like that. I'm not sure if I'm just not reading the documentation correctly or what, but you can see that with the identifier being the same, it actually closed one of a different type. Now, this can cause issues when your back testing goes back before one of these occurred. So if we started our back testing all the way back here and we were already if the first thing that happened was we were already above and the first thing that happened was a cross under, then if you had an entry for any other reason, it would have closed it. And that's what you're seeing here is we had our 1 over 2 and it closed the very first 1 over 2 here. But then our second position was a 1 over 3. But our next close was actually a 1 under 2. So it ended up closing the second position because the second close was because of the 1 under 2. It's a little bit confusing, but essentially, based on how it's set up, I don't believe there's much order to it. But that's why I decided to keep the pyramiding at 1, and we just focus on 1 entry. And it doesn't really matter to us what causes the entry or the exit, as long as there is a crossover. Now, I have added settings in here to take care of that, and we'll get to that in just a moment, to where you can make it to where there's only 1 crossover that you're looking for. Let's go ahead down now. I did make a change to how the labels handled crossovers. We had to separate the logic out for detecting the crossovers. So we did that here. They have to be visible. And this is just kind of optional. You don't actually have to have them visible on your chart to do this. You would have to change the code in order to enable that. But for me to trigger it in this situation, I was checking that they were visible and the crossover did occur. And we were storing that in that variable. Then if we wanted to show the crosses, and I have it disabled, and let's actually show you what that would do. You can actually see the X's and the crossovers now because of that, but we can still trade even if those aren't on, thanks to this change here. I just wanted to point that out. That's not a huge change. It didn't impact any functionality, but if you're following along, you might want to go back up and check out how we're doing this. And if you're not too familiar with coding, this is basically a conditional statement. If they are all true, because we're using and here, it will return a true value here. And when we use it to check for conditions here, it's going to return a true there as well if it was true when we checked it to the other conditions. Now, there's really not a whole lot of code involved to this. We're checking now for when we should do our entries. Now, the entry for a 1/2 crossover requires that we have our crossover and that we have something called trade MA12 crossovers set to true as well. Now, what is that? This is actually another setting we've added, and I'll scroll back up in just a moment, to where you can configure it whether or not you want to trade the specific crossovers. This is just another example of adding options into your code. So you saw the example with the pyramiding, how we could have multiple entries and it didn't matter which one closed it. Well, if we only wanted to trade a particular crossover, we could just uncheck these. Or let's say we just wanted to do the 50 over and under the 200 SMA. That would be the MA13. Okay, you can see it crossed over the 200 here, and all the way over here it crossed under, and that's when it exited. That probably wouldn't have been a great time to exit. You would have liked to have exited over here somewhere, but this is just an example, just a tutorial. You can see that the logic dictates that that's when it should have closed, and it did. Now, I wanted to show you that these were just other settings like we had for our indicators before, and you can see that is the case. It is exactly like the checkbox for show ribbons, except we have just changed the name slightly to correspond with what trades they would impact. And let's just take another look at that here. By default, they are all on. As I said, this is just a tutorial, so these things may not be perfect, but they do show you how things work. Now, let me see if there's anything else here that I wanted to point out. And I did want to go over the entries and exits. We kind of mentioned this, but let's go look into the code a little bit more. We talked about these conditions already and how they had to be true, of course, to execute. But there's also the strategy entry and the strategy close that we need to look at. Now, I've already mentioned that they have an identifier, and when you close, you can also pass in the identifier here to attempt to close that entry, but from what I can tell, that hasn't been working. So keep that in mind. As I've already mentioned, the close may close one with a different identifier. Now, if you know the correct way to do that and I'm reading the documentation incorrectly and I'm expecting the wrong thing to happen here, please let me know and we can go back and correct that in a later video. But for now, we're going to continue on. With our entry, we need to specify the direction, and that is going to be a long in this case. Let's pull up the reference manual and look at the entry. You can see you can enter a long or a short, and you can use the strategy type. I believe it was strategy.long. It just returns a true value. If you're true, you're going long. If you're false, you're going short. And you can see that here in their documentation. Now, when you pass in this third variable here, that's actually a quantity. And that variable is missing from mine because if you hard code that in as 1, it means you will trade one contract or 1% of your equity. However you have your backtesting set up, it will just use 1 every single time you trade instead of using the parameters that you've set. So keep that in mind. That's why we don't have it here. And then I've also added a comment as well, which really, it hasn't really done anything as far as I can tell. Perhaps it shows up in the backtesting results somewhere for something important. And then with the close, let's look at the reference manual again. Go to close. Now the close is set to where, as I said, you're supposed to be able to use an identifier to be able to close an order by referencing its identifier. Perhaps when it says close an order, open order. So if we were using limit orders instead, maybe it would have closed the limit order instead of closing the position. But I think that's what the cancel is for. If you can correct me, that'd be great. But from the documentation that I'm reading, that's what it means. Now, back to close, you can also set your conditions in the statement, and this also applies to the entry as well. You can see both here the entry and the close have conditions on them. So if you wanted to declare strategy.close and then put the conditions in it, you could have, but we're checking for the conditions here because if we want to do any other logic, we can do that here as well, as opposed to fixating the logic within this one line of code. This way we do it, we can open ourselves up to doing more code at the same time if we needed to. As of right now, we don't, but maybe later on that'll be useful. So I keep that in mind when I'm coding things. I like them to be flexible. And if we put our condition within the close statement, then it's not quite as flexible, and we might have to go back and change it again anyway. Now, continuing on, I did mention that this is a long only using market orders, and you can see there is an option to use limit orders, and there are several different options for strategies on how to place stops, use different types of orders, and there are even options to configure commissions with the backtesting, and we'll get into all of that later on. Just the fact that we are omitting the limit parameter on the strategy means that we are using market orders by default. Now, if you specify on your entry anything valid on the limit parameter, it will use the limit orders. Now, if you do the same thing for your close, it'll do the same thing there. So just keep this in mind and always look at the reference, or the reference manual, I should say, to get an idea of what you are able to do. There's definitely a lot just related to the strategy itself. Now, let's go back and take another look at the back testing just to give you an idea of what's going on here. And I know we've covered it some, but we'll go over it again because we've changed some of the settings. We are only trading crossovers on MA1 over 3 and under 3. So we've only had a handful of these on the daily chart in the entire history of Bitcoin. You can see the first one was on this particular date, February 10th, 2012, and there was not an exit until April 10th, 2014. So from here to here, and you can see our second trade, July 13th to September 16th, 2014, and so on. You can see there was a really good one here. That was the 2017 bull market. And yeah, that was a nearly 3-year trade, 2.5 years at least. And one other thing that I wanted to point out that was very important with the trades and the back testing is that we currently have an open position. Now, the back testing is really good, except I believe it is missing out on calculating our profit here. And this is something that you're having to deal with when you're actually trading, is that if you have an open position, it is either in profit or not. So when you're looking at this here, you perhaps do have that drawdown from when your entire percentage in is now down to here. So you went long here, your peak profit of that trade would have been up here, and you've been losing profits ever since then, and that's really not captured here. And that's pretty critical also when you're looking at the performance summary, because when you're looking at buy and hold returns, this includes the entire price history or the maximum amount back that it will go, the maximum number of candles back it will go. But the net profit is limited because it also doesn't include our profit here. We have a trade that started, let's go back to the list of trades. We have a trade that started at 5,536, and the current price as of the video is 8,219. So that's a pretty good profit, but it isn't included in our profit summary. So it's kind of hard to compare these numbers. If you're doing shorter time frames, lower resolutions, then it's probably going to be more accurate because you're in and out more often on your trades. But when you have a trade open for several months and there's huge price changes, it can impact the results in the performance summary to make you think that perhaps your strategy isn't quite as good as it really is. So once we would calculate the actual amount in here, then perhaps it's better than the buy and hold return. Now, one way to do this would be to, on the last candle of the back test, just tell it to close any open positions, and that would tell you where you would be at if you close them all today. But at the same time, you also want to know if you have any open positions as well. Plus, if you were to use it to do the trading with the strategy, then you also you wouldn't want all of your positions to close immediately because it's the current candle is the same one that it opened on, or on the next candle when there's another one that it can process. But anyway, we're going to take a look at limit orders and the stops, commissions, all sorts of things. If you have any ideas for what you want to see here, please let me know. Leave a comment on the video. If you like the video, please like. Also, please subscribe if you like these videos. If you like these types of videos, please like. I also do other things on the channel, crypto related. So please subscribe, and thank you very much, and have a great day. Hey, this is David for BigBits, and in this video, our 10th video in the PineScript development tutorial series, we are going to talk about percentage-based profits and stop losses. So these are actually going to be market orders with the strategy, and if you've been following along, you'll notice I've cleaned up the strategy quite a bit. It's very basic. If you've just joined in this video, it's going to look kind of dumb because the strategy is just worthless when you're looking at it, but that's because we've made it highly flexible, and this is just an example for the tutorial series. Now you can see the strategy has it buy when we have the crossover of our first moving average over the second one, and we've added in the new feature of the take profit or stop loss, which had it exit here with a stop loss of 15%. Now I'll get into how that works again in just a minute, but we also had a buy here, and it continued to sell with our old strategy settings of crossing under the second moving average as well. So we've managed to add in our take profit and stop loss alongside of our moving average crossovers that we use to also potentially exit the trades. Now, if all this sounds confusing and you hadn't watched the previous videos, it's probably a good idea to go back and maybe even start from the beginning. So let's continue on, and let's take a look at how this is actually done. Now, the only difference we've made in our actual strategy entries or exits is we've added a new line. In every condition where we had an entry, we placed an exit. And what the exit does, it essentially triggers a market order once your profit gets hit or your loss gets hit. Now, these are all different parameters in the exit function, and let's take a look. The first one is profit or loss, excuse me, and that's the text you're going to see here on the strategy itself when it prints on the chart, and we've associated that with the 1/2 entry ID, and we've created a new variable called profit target and a new variable called loss target. These are used to calculate the percentage differences so that we can actually get the right numbers for it to exit at no matter what we are looking at. Now I'll go over how we calculate those in just a minute, but let's go over how the profit and loss targets actually work when you're working with the exit. Now keep in mind we are just doing market orders. There is an option to use a limit order to take profit. It's not a big deal to me to use the market orders. Personally, I don't trade very often with strategies. Might look at a daily chart and trade on strategies, so there's probably not going to be a lot of trades going on for me. So the market fees aren't that big of a deal. But if you're interested in using limit orders to trade shorter time frames, and in most cases you get better fee rates on limit orders, so you might want to consider using limit for your take profit instead of a market order. But we're going to use market. And when we do this, we have to give the parameter a value that it expects, and that value is based in ticks. Now, what a tick is, that is the interval between prices shown on the chart. And let's go back to our chart here. You can see the interval on our chart here is based in pennies, since we're using the US dollar as our base currency here. So each tick is $0.01 or 1 cent. Now, if we wanted to set our take profit exactly $1 above where our entry was, we would have to use 100 ticks. So to do this with percentages, we have to calculate it, and the same thing goes for the loss parameter. It's also calculated in ticks. Now, it's important to note that the loss isn't really a negative number that you're working with. The system knows that the loss is a negative number. The measurement in ticks is just that, it's a measurement, so it's going to be a positive number. So if you're going down, you don't have to use a negative tick number. It's just a measure of distance downward, and the system knows that, and I'll show you how we calculate that in just a moment. But before we do the calculation, and that's right here, I'll explain that all much better in just a moment. But let's take a look. We had to add some new inputs here. We added our take profit percentage and our stop loss percentage. We have the minimum value at 0.01, and once again, that's because they have to be positive numbers even though you're setting a loss below where you enter. And I set the step size, which is the interval between the values on the settings, to 0.5, which is 0.5%. If you need to tune that down, you can just change it to 0.25 or 0.1, whatever you want. But let me show you the settings here and show you how this is going to actually impact the chart. Now, I have some arbitrary numbers of 30 and 15% set as the profit and loss respectively, and this probably won't work for most people. It probably wouldn't even work for me. But for our example purpose here, I'm going to change the stop loss percentage to 15.5%, and you should see that this actually moves down to the next candle because the percentage down increased. Now you can see, I just kind of proved my point that the percentage increases on the stop loss means it goes down further, and you don't have to use a negative percentage on TradingView like that. So I'm just going to save our changes to our settings there. I'm going to go back down. Let's look at our calculations for how we calculated how many ticks we would need. Now, the profit target, this is a pretty straightforward calculation. We have our close times our percentage divided by how many ticks we have. Now let me explain this, and I can actually kind of show you through some of the math here. Our take profit percentage is 30%. Now we have to divide that by 100 so we get the actual value we need to multiply the close by. So if it's 30% and we have the number 30, we have to divide it by 100, we now have 0.3. Okay, if the price were, say, $10,000 and that was the close, we would multiply that by 0.3, which is $3,000. Now, if we were to just use 3,000 ticks, now remember the ticks are 0.01 on this chart, so if we did 3,000 of those, that would only be $30 up for our take profit, and that's not what we want. We want 30% based on the example, which would be 3,000. So we divide that 3,000 by the minimum tick size, by that 0.01, and now it's, I believe, 300,000. So now it'll actually place the profit, the take profit up $3,000 at 13,000. And similarly, we do the same exact calculation for the loss target. We just use the stop loss percentage instead in that calculation. So there you have it. That's really all there is to it. I'm trying to think if there's really anything else to do here with the stop loss and take profit, and I really don't think there is in this video. You can see where we entered and where we exit. If you have an idea of something you'd like to see added to this, please leave a comment. If you like the video, definitely please like it. If you like videos like this, please subscribe. I'm always coming out with new ones related to development, trading, cryptocurrency, those sorts of things. So I would really appreciate that if you would. But stay tuned to the next video, and have a great day. Hey, this is David for BigBits, and in this video we're going to take a look at accounting for the commission or the fees in our strategy. Now in the past we have just went along with our strategy without trying to account for any fees on trading, and that's just usually not the case. Now there are some exceptions. With different exchanges there's different fee models, but I usually tend to focus on Coinbase on the channel, so we're going to take a look at using the Coinbase fees on our trading strategy. Now the first thing I'm going to do here is I'm actually going to clean this indicator up a little bit. We have a lot of extra features on here that we're not really looking at, so I'm going to go into the settings and turn some of these off. We don't really care about the second MA. We are not going to care really about the ribbons right now, and we are not going to worry about the MA1 1-2 and the 2-3 crosses. We can leave our take profit and stop loss the same. That doesn't really impact things too much. Now, for those of you who haven't seen the videos yet, the green line is the 50 period daily moving average. The red line is the 200 daily moving average. And of course, if we change our resolution, it'll change to that particular resolution. So if we change the 1 minute chart, it'll be the 50-minute moving average. Now, let's zoom out, take a look at the chart a little bit better. You can see we have one trade here. If you look at the strategy tester, you can see in total on the Coinbase chart there's only been 2 trades that have qualified, and they both wound up in profit. But as you can tell with our settings, let me bring those back up, we have a take profit percentage set at 30, but we're only seeing 28.85% profit. That is because we have accounted for the commission in the strategy. Now before, if you had watched the videos, if there was a take profit, it would have been strictly at 30%. Now that's pretty good, so let's see how this actually works. Now all of this video is mostly, well, is entirely around this particular line of code. We've continued on our strategy and we are adding more parameters on it to increase the usefulness of our strategy. Now, the unfortunate thing about this is that these are all kind of set at once, so we can't really use inputs on our strategy and change these values on the fly like we could before. As far as I know, you're going to have to go in here and you're going to have to change these values. Maybe we can try that another time to see if the inputs work. Maybe it's a different version of Pine in the future that can do that. But for now, you're just going to have to type these in and have to go with it as part of your strategy. These are all the defaults that are going to be a part of this tutorial. This is going to be the commission tutorial, scripted tutorial B, so that everything shows up in order on TradingView. Now the first item we're looking at is calc on every tick. Now what this means, and let's look at our reference manual here, calc on every tick, which is right here, this basically allows you to trade within the daily candle or whatever candle that is currently being used or being drawn on the chart. Now, this can allow you to essentially trade in the areas up here in wicks where otherwise you wouldn't have. Say you wanted to trade on an RSI value. Let's bring up the RSI indicator. And you can see the RSI got very high here and here, but the RSI would have been much higher if you were able to trade it during the middle of the day up here. So if you wanted to catch that RSI at even higher numbers in this wick, that would be how you would do it, to have every tick, every new set of data that comes in for this chart to process the strategy and potentially put in a position or not. Now, there are some important things to know when you're talking about using the intra-candle calc on every tick option, and that the data in the history of the chart, and I can close the RSI now, the data in the history of the chart, there's no way to run the back testing through the middle of all of these candles. So you see these wicks that I was talking about, there's no way to simulate what the strategy was in there, because the chart that we're looking at only knows the data that it's showing, not all of the prices and the changes that happened within that candle. To be able to do that is a bit beyond what we're looking at now. You would have to create the indicator to look at smaller time frames but trade the larger time frame moves, and it's entirely possible. But we're going on to talk about commission. So one of the key things to note about the calc on every tick feature is that now our strategy is showing the moving average completed all the way out to the current candle. Now before, and I'll show you this kind of live here. Let's save that change. It'll take just a moment. Now if we weren't calculating on every tick, it's now going to move the MAs back to here because it hasn't processed this candle yet. This takes just a moment to save. There is quite a bit of code in the strategy. Give it just a moment, and there you go. And of course I'm going to have to change back all the settings that we changed earlier, but you get the picture. It moved all the MAs back because it hasn't processed this candle yet, because we didn't have calculate on every tick set to true. Now I'm going to change that back. I'm going to leave the ribbons on here just because we're going to be changing a couple of other values here as well later on, so they'll just come back anyway. So let's wait for this to save, and I'll move our MA back onto the current candle. Now, let's actually talk about commission. And if you don't know, that is the fee that the exchange takes on every order that you make. Now, whether you're placing a limit order, which basically means you want to buy at a specific price or sell at a specific price, they could have a different fee than if you told it to buy right now, which would be the closest price in the order book. Say somebody wanted to sell at whatever the current price is, you could do that immediately right now. A lot of times that has a higher fee than if you place an order down here and we're willing to wait, or an order up here and we're willing to wait. Just keep in mind whatever exchange you're using, because you will need to know the fee model for that exchange. Now Coinbase, which is what I'm going to use for the example, uses a 0.5 percentage point to calculate the fees for each trade. And now for your basic account that doesn't have a lot of volume, that applies to both the market orders and the limit orders that we were just talking about. So the first thing you're going to have to do is we got two new parameters. A commission type, we want to use a percentage because Coinbase uses a percentage-based fee. And then we also need to set the commission value to 0.5. Now, if you're thinking about 0.5%, you might be tempted to put 0.005, and I completely understand why you would do that, because when you're talking about based on a 100 value, that would be the case. But 0.5, this is measured based on percentages, not whole numbers. So it's 0.5 for 0.5 percentage. If you wanted it to be 1.5%, that's all you would have to do. Just put the integer before the decimal there. Now, this is how we take care of a permission, or a percent-based commission, excuse me. If you wanted to do a fixed fee, like say you're trading stocks or futures on E-Trade or something, and there's a flat fee of like $2 per contract or something, then you could put in a flat fee here as well by changing the commission type. Let's go here. Let's take a look at our commission types. Here we go. They have a percentage, which is what we're using, a cash per contract. So that's the example that I gave you. So $2 per contract, that would be this example. And then cash per order. So if it only costs $5 to execute your order on the exchange, no matter how big or small it is, you would use this one. And then you would just set your commission value to whatever that value is. So if you were doing the cash per order and you were trading 5 contracts, you wouldn't need to worry about there being 5 contracts. Your commission value would just be whatever the price is per contract. So if it was 50 cents per contract, this would be what you would have in there, exactly what we have now. If your per order commission type was being used, your commission value would be, for example, $5 per order, and that would take care of the entire order as opposed to worrying about how many contracts you're actually using in the order. Now, that being said, let's take a look at the strategy tester, and this is on the daily chart. Yes, I didn't think there was this many on here, but there is. Okay. That's because I need to change my settings. We'll leave it like this. We're trading all kinds of different crossovers now, so you can kind of get an idea. Like I mentioned earlier in the video, I apologize, I was completely in the way. Let me scroll this up here. I was in the way earlier in the video. I apologize about that. But there is a take profit on the strategy of 30%, but we're only trading 28.85% when we take our profit. That's because we're using a market order, which has 0.5% fees. Now, if you're a more experienced trader, you know that there is more involved with trying to get an accurate back test and simulate a strategy than just the commissions and the fees. And you know that there is such a thing as slippage, and that is when you don't get the price that you want. Now, this is sometimes, in my opinion, a bit more severe when you're using limit orders, when the market tends to move away from wherever you're trying to enter, and you want to enter it again, and you keep placing the orders in. But there's also slippage when you make market orders, when you move the price and your average price is either above or below where you got in, or where it was signaled to go in at, I should say. So there is a bit more to it. Your average price of all your contracts may not be the price where it triggered at. Now, for example, here, I don't have any slippage on here. So the contracts execute at this particular price, where in the real world, if you were to trade 389 Bitcoin on a single trade, you would likely move the price up or down in whatever direction you trade. That's just a fact on most exchanges, unless there's a much larger order out there. This is a fairly large order for Bitcoin at this time, so it would move the market significantly if you were moving 389 contracts, and significantly is relative. It might just be a few tenths of a percent, maybe not even that much, but it does impact your profit, so it is something to keep in mind. Now, when it comes to accounting for the slippage in the strategy itself, you can see I have it set to 0. That's because I don't really care for how it's being taken care of. I would love to be able to set the slippage to a percentage amount, but the slippage is actually a number of ticks, which is the size increment on your y-axis on your chart for the price. So here it's 1 penny. So the slippage, if I set it to 1, would adjust the price up or down depending on the direction of the trade by 1 penny, so that it could account for those price changes due to the slippage of us moving the prices when we order. Now, that's why I've included it in here. I've added several notes so that you know exactly why I did things the way they are in the strategy. And so far, I mean, it's pretty good. Like I said, you can change all the settings around to however you like. When we started the video, we only were working with the MA1 and 3. We didn't even worry about the ribbons. We left our take profit and stop loss the same. And you can see that impacted the strategy tester with the list of trades, the performance review, where in fact you can actually see the amount of commission you've paid. So I do want to dive in just a little bit more and talk about commission when you're looking at strategies, because and this you might think this is financial advice, but it's just kind of a fact of the way things work. The more often you trade, the more fees there are. So you need to take that into account when you're trading. If you're trading these longer time frames, such as daily charts, the fees are not going to accrue as fast because you're not trading as quickly. Whereas if you're trading, let's move this down to 5-minute candles. Say you're trying to trade 5-minute candles, they are going to accrue much quicker. You can see $35,000 now, 36 almost, instead of 2,000. That's because we got in and out of a lot more trades. But when you're working with these smaller candles, a lot of times the percentage movements when you enter and exit are also a lot smaller. So that's why it's very important to keep in mind your and let me make sure that actually showed up for you here. Make sure my head wasn't in the way. Yeah, I think you can see the commissions. Where are they? Right here. Yeah, you can see that. And let's go back to the list of trades, and I'll bring that back up here. So you can see we had our take profit and our stop loss at 30 and 15% respectively. But when you're working with these smaller time frames like this, you're getting in and out of trades quicker. So if the market doesn't move enough to account for the fees that you're having to pay, then you'll see a lot of this, a lot of red. You might have closed when the price was above your entry, but due to your fees, you ended up losing significantly. And it might not be super significant. Like I believe this one is a good example, 0.66%. You're paying 0.5% fees on the buy and the sell. So you would have been in profit if there were no fees. That's another reason why, this is a very good example, I should say, of why it's important to consider commission in your back testing, especially when you're trying to come up with a back test for quicker time frames or resolutions such as the 5 minutes like what we're looking at now. Now, I'm going to call that pretty much for the video. We've covered just about everything I've went over. I'm going to be publishing this script in just a moment. It's going to be available on my TradingView profile, and you can actually see that here. It's BigBits IO. We've got over 50 followers now. It's kind of early in the channel still since the reboot, and we've got plenty of scripts posted. I've posted several ideas. We've got a lot of likes going on, so check out the profile. And if you like the video, please like here on YouTube. And check out the other videos in the series before this one, because there's a lot of the tutorials out here and you can get a good idea on how to create these indicators and strategies on your own. There's a lot of good examples on things that you can do and some notes and comments, and make sure you use the reference manual as well. But check out the profile, like the video, and if you like these videos, not only check out the scripts here, but also check out the series on YouTube and subscribe, because I'm going to be coming out with more videos later on these development tutorials and also some other things related to trading development. So make sure and subscribe, and just, have a great day. Hey, this is David for BigBits, and in this video we're going to take a look at how to take our strategy that we've built in this development series and kind of test it out with paper trading. And now, if you're not familiar, paper trading is just simulated trading, just noting your trades that you would have made in a journal and tracking the profit that you would have made. Now, part of the good things about using paper trading is you get to see not only with the strategy tester in TradingView how well the back testing did, but with paper trading you get to see how well you are at actually executing that strategy. Now, a lot of times when people come up with a strategy, they might get emotional when the price changes. So tracking your trades that you would have actually made in a paper trading journal or like this tool in TradingView is a good way to see just how well you might actually do when you do trade with the strategy that you have. Now, I'm going to remove myself from the video so that we can see everything. Alright, you can see now the strategy that we have on top of our ribbons that we've made. You can see we entered here, exited here with a profit or loss, entered here, exited, entered, exit. Okay. In the strategy tester, you can see the trades that it made, but what we're going to be doing in this video is we're actually going to be using the trading panel, which you can see here on the bottom part of the screen. And it gives you several options, and you can actually connect to different brokerages accounts, and you can actually use this to actually trade with the order panel. Now, we're not actually going to be doing that in this one. We're going to be using the paper trading. This is set up in TradingView as a broker so that it can track trades that aren't real. Now, the first thing you do after you set this up, it'll automatically create everything for you. You can see you have an account balance and equity. The first thing we're going to do, though, is we're actually going to click on our settings over here, and we are going to show the order panel. It kind of gives you an idea of what you're actually going to be working with when you do go to make orders. You can actually place limit orders. You can use a take profit and a stop loss when you place your orders. We're going to be doing market orders in this particular video just because they're very easy to work with and very easy to understand. If you want more information on limit orders, I suggest you look at their documentation, but we'll take a brief look at it kind of towards the end of the video. Now that we have our order panel pulled up to the right here, we're also going to reset our trading account. And the reason we're doing this, even though it's brand new, is because I want to change the balance. I don't really have $100,000 that I would be able to test with in real life. So let's actually change it to, let's see, $8,000. Hit reset, and it's going to reset our account balance and our equity as well. So now we can have an even more realistic view of how we're going to be trading. Now, we also need to keep in mind, as you might have noticed from our last video, we need to keep in consideration the commission and fees. So we need to set up our commission settings. This entire series I've been pretending we're using Coinbase Pro, and they have a 0.5% fee on buys and sells. So we're going to use that for our commission here. Now that we have that set up, we're going to start actually making an order. Like I said, we're going to be using market orders. Since we don't already have a position and you can't really short on Coinbase, we're going to be using a buy order to open our position. So you can select which side you want to use. So if you already had a position open, you can click on the sell side and you can sell through the order panel to close your positions. Now, we have selected the buy side, we have chosen a market order, and we can choose the quantity. Now this is the number of units that we're looking at. We are using Bitcoin here on the daily chart. You can see the price right now is 7,410. And if we were to buy one of these, that would use most of our balance. But we are going to use one. And we can go ahead and buy one now, but I'm not going to do that. I'm going to go ahead and I'm going to add a take profit and a stop loss. Now, with the take profit, this will place a limit order or execute a market order at the specified price that you set based on the amount you set here. Now, I recommend you set the actual price field here. Because when you start fooling around with the percentages and dollar amounts, that is based on your total equity, I believe. And to me, it didn't seem to feel right. I would like to look at percentage per trade, but if you're working with a portfolio, then it might be more important to measure on your entire equity. So it might just be easier for you to go ahead and calculate the profit that you want to get and convert it into the price and set it that way. Let's just set an order here at 7,500 for take profit. Let's set our stop loss at 7,000. All right, so now when I buy on our paper trading, it won't actually execute an order, but it will mark down that we bought at this particular price, and it's also going to place a take profit order, and we're going to see a stop loss, and I'll show you that in just a moment. So now we're going to hit the buy button. And you can see, zoom in a bit here, this blue line is our position where we entered. This red line, as you can see, is the take profit, and this one is the stop loss. You can see our position on the paper trading here. We have one, it's on the buy side. That's the average fill price, and this is where we're going to be taking profit at. This is where our stop loss is at, and this is the current profit. Now, we can also take a look at the orders, and you can see how this worked. When we made our buy, it filled the buy order, but it also placed a stop and a limit order, and those will execute if they get triggered. Now, they may not get triggered. You may want your strategy to go ahead and close based on other reasons. So let's take a look at what we can do soon here. And I did want to also mention, let's see, where was it? On the trading journal, I believe. No. On the history here. Okay, so you can also see the commission that you paid based on the fees as well on the orders in the order history here. So when you're doing your paper trading, it's also important to note your commission. So you'll want the price to move up $37 since you bought one Bitcoin in this example, in order to at least break even on the fees that you paid on the original one. But you also need to consider the commission on the sell order, which is likely going to be about the same amount. So you'll probably need somewhere in the order of $75 to break even on the trade and an increase on price. So it's important to look at this to make sure that you know where you're going to come in at in profit with your commission, and it gives you an idea with the position screen here, but I don't think it really accounts too much for the commission when you're looking at the profit here. It says we're up 8.65 in profit, but I don't believe that considers the commission. So just keep that in mind when you're doing your trading here. Now, we have already entered our position. We don't really want to wait for this example for it to actually close the position with the take profit or the stop loss. So what we're going to do is we're going to assume that we had another part of our strategy trigger a sell. And you can see here we had an entry. It's really small, but there's a blue arrow. Try to move the cursor. There's a blue arrow here, and that shows where the entry on our position was. And we're going to sell, and you should see a red arrow as well come up. Let's click our sell side. We have a quantity of 1, and what we're going to do is we're just going to sell that 1. We're not going short, so we don't need to take a set a take profit or a stop loss. Let's go ahead and sell that one. Excellent. You can see we entered and exited on the same candle. Let's go to our orders, and you can see we had our limit and our stop. This is where our take profit, the limit was. The stop was also set as an order. You can tell they were both canceled. That's because we closed the entire position, which there was nothing left to take profit from or to stop the loss from, so it just canceled the orders. Instead, it filled here at this particular price. You can tell the price actually increased by $9. And we had a profit based on the price. However, you can tell our account balance actually went down considerably by about, what's that, $66, and that is because of the commission. Just remember to keep in mind, I told you it was going to be about $37 again when we sold. In total, it was about $74. We made $8 in profit. 74 minus 8 is 66. That's how much we had as a loss, and you can see that reflected in the account balance. So just keep that in mind. Again, when you're looking at your current profit, that you also need to consider the commission as well. Now, we might just go ahead and look at the limit orders here. We have a little bit more time left in the video. So when you're looking at limit orders, you have a sell side and buy side, just like you had for the market orders. let's look at the buy side here. Now it's giving the option to set your ask at the current ask plus or minus a certain amount. So this amount, this +6, that is actually based on the ticks, or what they refer to here sometimes I believe is pips, and it'll increase the price of the current ask by 6 ticks. And for Bitcoin right now in this particular chart, it's 0.01 or 1 penny. So if we were to set the ask 6 above the current ask, you can say it went from 47 cents to 53 cents here. Now we can also set this to the current ask. We would be buying 1 Bitcoin here. And we can also set our take profit as well. And you'll notice the pips, and this is also the ticks. So if you wanted to do this as well, you could replace using the price instead by using this. And remember, the dollar amounts and the percentage amounts, I believe, are based on the entire equity of your trading account. Now also notice on the sell side, they do the exact same thing, except you can see the bids here. You could go plus or minus the bids, the current bid in the book. So if there's a large spread in the book and you want to beat, and if you want to sell, you want to get in before all the others, you can do bid -1, and that will put you just below the highest sell in the books. But you also have to keep in mind that might also execute immediately, and you might get different fees depending on the exchange that you're using. But that pretty much covers it all for now. We're going to go into some other things. I'm pretty sure we're going to start working on some other indicators. Now, one of the things I want to work on is specifically using other indicators. Let me pull myself back into the video here. And we're going to be using different indicators. I'm going to create some custom indicators. I'm going to show you some other useful functions. But for the most part, I think the series has guided you into how to create your very first indicator and develop that into a very complicated, or at least friendly, robust indicator with tons of features that are at your disposal now. Plenty of examples, and if you need to, you can always go back and look at the videos. But we took you from a simple indicator to something much more robust and turned that into a strategy, and we showed you how to execute that with the paper trading. Now, going forward, we are going to be taking a look at different indicators, and one of the things I'm really interested in showing you is combining multiple indicators into one. And to do that, I believe we're going to use a scoring system. We're going to take the indicators that we would like to use in a particular strategy. We're going to add a scoring mechanism, and we are going to trade based on essentially a confidence level. That's what the scoring is. The more points your strategy would create with the different indicators, the more confident it would be in whichever direction it should trade. We're also going to take a look at some other features that I've come up with, and if you have any suggestions, please leave a comment on the video and I'll take a look at all of those. But that's it for now. Thank you and have a good day. And by the way, I forgot to mention, check out the profile on TradingView where I have all of the scripts for everything that we've done already. If this is the first video you're watching, then you probably may not be aware that we have tons of other tutorials already out there and other indicators as well. So please check out my profile on TradingView. And if you like this video, please like the video. And of course, if you like these types of videos and want to see more in the future, please subscribe. It helps me a whole lot. So now I'm actually done. Thank you and have a good day. Hey, this is David for BigBits, and in this video we're going to continue our TradingView Pine script development, and we are going to take a look at a couple of different things that we haven't before. And we are going to look at an indicator that I've published, and it isn't part of the series that we've done before. It's actually its own indicator, It's called volume effectiveness, and you can actually find it in the public library. There you go, volume effectiveness. And what this indicator does, and the reason we're using it, is because it works with volume, something that doesn't really chart well with the price. In the past, we've just been working with moving averages. So in this video, we're going to work with volume, which doesn't really overlay well with the price. You can see all of it's down here. It kind of looks good for this particular chart, the way we're using the volume, but we're going to be working with negative numbers with our particular volume indicator. So what we're doing is we're actually setting this indicator not to overlay on the main chart, but it's going to be its own kind of chart here. So that's one of the things we're doing, and of course we're working with volume. Now, what is this indicator all about, and why did I make this particular indicator? I made this indicator to help you measure the effect a single unit of volume has on the price. Now, if we zoom in here a bit, see there's a really large candle here. This is the actual volume on the candle itself. But you can see, compared to the next candle, the effectiveness of that volume is much higher. That's because the price increased more with less volume than on the next candle. I hope that makes sense. Essentially, for every Bitcoin on this particular chart, the Bitcoin USD chart, for every Bitcoin that was traded with this amount of volume, this is the percentage of price it was able to increase the price on the daily candle from open to close. So from our open price here, considering all of the volume throughout the day, this is where it ended up, and the effect, of course, is that change divided by the volume. And why does that matter? It just kind of gives you an idea of basically how much the volume is. It kind of gives you an idea of how stacked the order books were just at a glance. It may or may not be useful, but it is a good example to show you how we're working with volume and how we're showing you these particular non-overlaid charts. And you can see we can actually kind of pick up on the trends by smoothing these averages out. So it sounds like it may or may not be useful when you're just describing it, but when you look at the chart, we're actually able to plot it out to where it's actually kind of useful, and you can kind of see that it aligns pretty well with the price movement, and you can take it and use it as part of whatever suite of indicators you have to try and figure that out for yourself. But as part of the tutorial, let's go ahead and get into the actual script here. We have all of our other things that we usually have in the other videos. The first thing you're going to notice different really is we have to set the overlay equal to false. This is what makes it its own little chart here instead of overlaying on top of this particular chart, the main chart. I've also set the precision because although with Bitcoin on Coinbase, these percentages are just fine at 4 or 5, but other coins, other trading symbols, the percentage movement on price per volume could be much, much lower. So that's something to keep in mind. But since the chart is relative, it doesn't really matter what the scale is over here. It could be 8, 9, 10 zeros or more in percentage points, but when you're looking at them comparatively, you can still kind of get an idea of what's going on. Now, we've added a few features in here. Let's go ahead and take a look at what we've done. We've made it to where we can hide or show the bars. So now you can just kind of see the trend, and we can hide or show the smoothed moving average. We can also adjust the moving average period, the type of moving average, and we can also set this to where it's going to be an absolute effectiveness. Now that kind of just disregards whether it's a red candle or a green candle, and all of the values are positive. This is how much effect the volume had just in general, regardless of direction of the price. I'm going to turn that off. I don't really care for that too much. And we're going to hit OK. Now, I've already covered how to do inputs and everything like that, so if you don't know how to do that, go back to the other videos. I did create this section that pretty much does all the logic for us for calculating the effective volume. I've already told you we are going to use the close price divided by the open, and then we're going to subtract 1 from that, and then multiply it by 100 to get the percentage change. Okay, so this right here, just so you're clear, this is calculating the percentage change for the day, and then we just divide that by the volume for the day. It's really simple. On this particular calculation, we're using the absolute value. That is what gives us these values. It's the same thing, it's just if the number was negative, now it's positive. That's pretty simple stuff. We've also already covered this function on how to use different moving averages as an option. Those were in the previous videos. And of course, we set the value and then we plot our information on the chart. Now, it's quite simple. As you can see, we just have the smooth line and the bars, and this is it. That's all there is. And to use volume, it's just a property of the chart for this particular candle that you're on. So it's similar to the close or the open. You just call volume, and it knows that you're talking about the volume for the current candle that it's processing. And that's all there is to it. We have our chart overlaid. Well, not overlaid. It's on its own chart. The indicator is on its own chart, and it's using volume, which is something we haven't used before, and it's smoothing that out. And this is how you can make your own indicator that's not on the same chart, and you can actually plot more and more information on this single overlay as long as you do it all in the same indicator. Now, if you go to do other indicators and they all have their overlay set to false, you'll notice that it's going to add other charts. So for example, another one that I've done, let's go to the public library, smooth RSI. Excellent. You can see this one also is not an overlay on the main chart, but since it's not part of the same indicator, it's going to create its own chart, and it has all of its information laid on that chart. Now, that pretty much covers it for this particular video. If you want to see this indicator that we talked about here, or the smooth RSI indicator, then please check out my profile on TradingView. You can see I have that published here. It's got quite a bit of likes, so we're starting to get a lot of followers and likes on the account in general. There's all of the scripts from the tutorials before. So if you like this video, please leave a like, and if you like all the stuff that we're doing here and you want to see other examples of things that are being done, please subscribe. There's going to be more videos coming up in the future. I think in one of the next videos we're going to be doing a scoring system on the indicators. We're going to kind of combine multiple indicators and score them and give confidence levels and basically tell you in that particular indicator whether it's a good time to buy or sell. And of course, it's not going to be trading advice, it's just going to be an example, but it's going to give you an example of how these things are actually done, where people take multiple indicators into consideration for a single strategy, as well as plotting them on an indicator to give them an idea of how confident they really can be on a single trade. So that's all there is for today. Thank you, and have a good one. Hey, this is David for BigBits, and in this video we're going to take a look at the plot function on TradingView, specifically take a look at the show last property as well as the offset, which is kind of out of view here. Let me take myself off the video and we'll go ahead and get started here. Okay, there we are. Now, you can see we've added an offset here, and I'll explain exactly what this does. But when you're looking at the chart here, you can tell we're using a moving average. This is a new indicator I've created. It's already published out on TradingView. You can go check that out in the library. You should be able to go to the public library, search for fancy moving average. There you go. It's one of the few ones out there. It might not be registering in the public library just yet because I did just post it a few moments ago. But by the time this video is out, it should be available to everyone there. As you can see, it is a published script here, and you will have access to that as soon as it's available in the library. They probably just need to index it at TradingView. But you can see this is a moving average, and if you followed along with the video series before, you'll notice some other features such as the forecasting here at the end of it, but you'll notice something kind of new. There's one line, but it's got two different colors. But instead of just changing colors when the price changes direction on the moving average, say when it goes down you would have a red line, and when it goes up you would have a green line, which a lot of people do. I wanted to do something a little bit different here, and I wanted to highlight just the candles that are being shown, or well, of course they're just being shown, but I wanted to highlight just the candles that are being used in the calculation for the moving average. So for example, we have a 50 period simple moving average right now, and if I change this to 75, you'll notice it should go back to somewhere around in here, I believe, maybe further. Yeah, so now the green portion of the line goes back further because those are 75 candles back, and that just shows the latest candles that are included in that calculation. So that moving average calculation starts with the candle back here all the way to the current candle, which could be pretty helpful, and it kind of helps you understand the forecasting as well. So you can see when this candle leaves, that's why the forecast is going up. It was a red candle. The price stays the same. It gets replaced with a higher price here, so it'll go up. That's why the forecasting is in there, just kind of give you an idea on this end, but you can also get a better idea on the back end, so you can even think out further ahead than the 5 that are given to you in the actual indicator. Now, if you've been following along, you probably want to know how that's done. If you don't really care about how it's done, just go ahead and check out the TradingView profile, BigBits IO. Like I said, it's already out there. Now, we've copied over all of our other functions for the resolution, the moving average, and also for the forecast and the bias. Now, one thing you'll notice that we do different is we calculate one moving average, but we have plotted up to 2 different moving averages. Now, the way this works is we calculate our standard moving average, which in this case is 75 period. I want to move that back to 50. Okay, I think it's a little bit easier to see when that line isn't being covered up with candles. But we have a 50 period moving average, and the show last feature, and let's take a look at the documentation here. The show last feature allows you to only plot or show the last however many bars or sections on the x-axis that you would like to go back. I don't know why I said bars, but yes, it is points on the x-axis backwards that it would show when you choose show last. You can see here the definition. If set defines the number of bars, so I guess bars was the right choice of words there, from the last bar back to the pass to plot on the chart. Okay, so you get the idea here. Hopefully that can move out of the way. All right, so we're plotting 50 back. You can see if we have chosen in our settings to highlight the inclusion, and I'm just kind of calling this the inclusion period because these candles are included in the calculation. We have the highlight inclusion selected. If it is selected, then it's only going to show the last 50 candles, which is our MA period. Now, if we uncheck this, it's going to set show last equal to 0, and what that does is basically means it's not a valid number, and you should show the entire history. Now, also when it comes to that, we also have the other line, the shaded line. I'm calling that the ghost trail, and this should only show up when we are showing or highlighting this inclusion period. That's because if we had it show up as well here, then it would shade the green and it would still look like there was a trail on there. And you don't need a trail when you're not even showing the inclusion. So what we're going to have to do here is we're going to have to add a couple settings. So we're going to have to add a button to show the inclusion ghost trail, and for that a toggle, I should say, or a checkbox. And when you uncheck that, you can only see what's included in the candle calculation. Why you would want to do that, not entirely sure, but we gave that to you as a setting, and you can see, if you wanted to, you can see the ghost trail, which is the entire price history of the moving average that's available. So how do we do this one particular line? So you can tell that we are only showing this green line for the last 50 candles. So how do we show a line on the chart that goes back and actually stops right here? Because you can tell it doesn't overlap with this green line, because if it did, it would be shaded a different color. It wouldn't be the lime green color that we set it to. So we have to make sure that we only plot this line when we are showing or highlighting this inclusion. So only when we are showing the candles included with the green line, and when we have the show ghost trail selected, which is basically just show this line. And to do that, we are going to plot on the chart the moving average we've calculated, but we're going to go back and we're going to look back 50. In this particular case, the period is 50, so we want the moving average 50 periods ago minus 1, so it'd be 49. And that's because it's a zero-based index. It starts at 0. If we want to actually go 50 back, we need to go 49 back in the array. That might not make sense if you're not a somewhat experienced programmer, but it's a pretty basic topic in programming. Basically, you start counting at 0, so we need to go 49 back to get to the actual 50th moving average. And if none of those are set, it's just not going to show the line. We've already discussed that, and I've shown you that just a moment ago. To get it to look like this, I just set it to black and set the transparency to 10. Now, we're also working with a new property here. I'm not sure we've used this in our videos yet. For the offset, let's go back to the plot documentation. Offset, it's pretty easy to figure out. It shifts the plot to the left or to the right on the given number of bars. The default value is 0. So our green line here has a 0 offset because it's not been set. And you can see it's plotted on the most current line. It's not offset to the left or to the right. You see, this one is offset to the left. Now, if we didn't have the offset, then this particular line, the gray line, would also end at the current candle, because we would just be plotting the moving average of 50 candles back. If we also don't offset it backwards, then it won't show up correctly in the correct location. So to do that, we go back our 49 and we multiply that by -1 so that it offsets to the left. If you have a positive value there, it's going to offset to the right. So we have to offset it back 49 to get it to do the correct line. And I would have done 50 here because it's not necessarily in an array and it's not 0 index based. But what happened if you didn't do that is that these lines would not connect, because it would plot up to here and there would be a gap and it would be here. So I left it at 49 on this one, even though it's not 0 indexed, just because I wanted them to line up and touch each other. And that's all there really is to that. So that's pretty much all there is to this particular video. I wanted to highlight this feature that I've come up with to only show the candles that are included, or basically highlight those that are included in the calculation for the moving average, and then also show you the past history of it, and then kind of explain how we did that with the show last and the offset feature. So if you like this indicator and you want to add it, I've already mentioned you check out my profile. There's other indicators and things on there as well, so make sure to check those out. If you like the video, please like. And if you like these types of videos, please subscribe. It helps me a lot. But you'll also get to see all the other videos we're doing. Especially if you like this video, go back and check out the other videos in the series so far, where you can kind of follow along, and all of this other stuff that I didn't talk about would be on there as well. And it looks like we just got a Brave advertisement while we're doing this. That's okay. I support Brave. So yeah, that pretty much covers everything. So just like and subscribe, and that's about it. Thanks. Have a nice day. Hey, this is David for BigBits, and in this video we're going to take a look at a new type of indicator that we're going to be covering here, and that is essentially combining multiple indicators, which we've already done. But in this particular indicator, what we're going to do is we're going to create a scoring method, and the indicator is going to use points based on the different indicators we're using to help us determine when a good time to buy might be, or just how confident the signal to buy might be. So to get started, first thing we're going to do, we're actually going to make a new script. So click on the Pine editor. If you don't see it on your chart, it's down here at the bottom. Pull it up, go to New, Blank Indicator Script. We're going to start out with an indicator. This is what you're going to start with here. There's really not much to it. We're just naming the indicator, the study. If you've seen the other videos, you'll know what the study means, and you'll know what plot does as well. But plot, pretty obviously, just plots whatever you want on the chart. So in this case, if we were to save this indicator and add it to the chart, it would plot the close, which is the current price or the end price of each candle. Now let's go ahead and name this Scoring Development. Now I'm going to kind of do some live coding today. For this video in particular, mostly because I had a very complex scoring script or indicator that I made, and I realized I need to break it up into smaller segments. So this video is actually going to end up being about 3 videos worth, because there's a few other concepts that we're going to cover that need to be covered in their own video, and we're going to build from this particular indicator that we're starting with today, which is a very simple example of how the scoring is going to work. And then we're going to move into one that's a little bit more complex and go over some other parts of PineScript that's going to help you with other things, and hopefully do some things you haven't really thought of before. So let's go ahead and save this as Scoring Development. Excellent. Let's name it. Well, actually, let me copy some code over here from my other screen. Just a moment. We'll just rename this, copy that. So what we're going to be doing in this particular indicator is we are definitely not going to be plotting the close price. I'm going to go ahead and erase that because we don't need that, at least not yet. What we're going to be doing is we're going to be taking a look at 3 different ways to judge what's going on the chart. So we're going to look at the price. We're going to see if the candle is green or not, because usually if you're looking for a bounce, then you want a green candle. Like I said, this may or may not be a good strategy. We're just getting started here. I just want to show you. So let's pretend that if it's a green candle, it's worth, let's see, 5 points or something like that. And if we have the 50 period SMA, which I have on the chart, if it's moving upward, then we'll give it a few points because we're in an upward trend. Now, the other one that we're going to be doing is the RSI. And what we're going to be taking a look at is we want to give more points for RSI the lower it is. Now, one of the things we're going to cover in the future videos is how do we handle times like this, where you can see on the chart where the RSI bottomed out here, but the price continued to drop even though the RSI went up. Now, you might look at that and call it a divergence, but what you really want to do is you want to quantify that somehow in your scoring. And I think I found a way to kind of help with that. It doesn't necessarily identify it exactly, but the scoring method that I've come up with that I'm going to show you in the last part of the videos for scoring will kind of help you account for the price continuing to go down, even though RSI bottomed out a few candles ago. But for now, we're just going to focus on trying to capture a low RSI as a more valuable point. And in that case means it's going to be worth more points on our indicator. So what we're going to do is we're actually going to build an indicator kind of like our RSI model here, except it's not going to bounce between 0 and 100 like RSI. It's going to be on its own chart here. That's why the overlay is set to false, and it is going to range from 0 to whatever number of points it adds up to. So it could add up to 10 points, it could add up to 1,000,000 points. It just keeping things relative in scale. All right. So now that I've explained everything, and hopefully you're still watching the video, I know I normally show you an example. That's why I said these videos are going to be a bit different. So let's go ahead and start by calculating our RSI, and we'll name this RSI. Set the RSI set to the close value for a 14 period. That's default. Now I'm not putting in the inputs right now like we have in the past, and that's basically just because this is the first one, and it doesn't really matter if it's hard coded. We're just doing this for an example. Now, the other thing we want to do is we wanted to check for if it was a green candle or not. So we'll name this one is green, and I actually need to go back and change these, and we're going to use a condition, which is the parentheses. If you compare two values within the parentheses, it's condition, it's going to return true or false. So we're going to set is green to true or false by comparing the close, making sure it is greater than the open. So let me go back. I want to rename these. I hate working with lowercase. It's just something I've gotten used to. I typically capitalize all acronyms and use camel case with my other variables. So after we get that, we also wanted to look at our SMA 50 period and make sure these comments match. All right, we'll call this SMA, and then we will call the SMA built-in function with the close with the 50 period. So now we have our values, and let's actually go ahead and plot these. Plot the RSI. We're not going to plot is green, and we'll also plot the SMA. The reason I'm going to plot is green is because it's a true or false. It might show a 1 or a 0, but I haven't even tried plotting a Boolean value on here before. So we'll just save this. Oh yeah, I need to capitalize those. My apologies. That's part of the fun of doing this kind of live coding. Even though this is a recorded video, I am not going to go back and edit this stuff out. That's too much work. All right, that's been saved. Let's add it to the chart. Okay, so you can see our SMA up here. That's following along with this value. Of course, it's not on that chart because we set the overlay equal to false. Now the RSI is down here, and you can see it's this number. And let's go to the last candle here. It's 46.06, and on the smoothed RSI right here, you'll notice it's also 46.06. So it's the same calculation that we're using there. Now that we know that, I'm going to go ahead and get rid of that RSI. We're going to quit plotting the simple moving average just because it throws things way out of scale. And now we can see the RSI. Now, the first thing we're going to do is we're going to start coming up with our points. Now, the first thing we're going to score is going to be if the candle is green. So let's call this one is green points. And let's set that equal to, we got to do a condition here, is green. So if it is a green candle, then we are going to give it, let's see, how many points did we say? I think I said 5. Let's just do 3. And if it's not green, then we're not going to give it any points. That's fair enough. So if you haven't seen my videos before, this is checking this condition, and if it's true, it returns this value. If it's false, it returns this one. We're setting that value here. Okay, go on to the next one. First, let me go ahead and add some notes here. Green points. We'll do the SMA points now. And we're going to have a condition here to check whether the current SMA is greater than the previous SMA. And I've covered this in the past in one of the most recent videos, and that is we are working with an array. The simple moving average is a series of data. You can see it on the chart here. In order to access the previous values back here, when we're looking at the calculated values, we have to supply it an index number to go backwards. So the current candle is always index base 0. That's the way arrays work. So if we want to go back one candle, we have to say we're going to use the SMA 1 in the array. That's the first one back. So that's how we get the value of the previous one. So to know if the SMA is moving upwards, we have to check if the current SMA was above the previous SMA one period back. It's pretty simple. So once we check that condition, if it is true, we'll give it another 3 points. If it is false, we'll give it 0. So now we have points for our green candle. We have points for a upward moving trend. Now the interesting part is really capturing the value of the RSI. So we don't really care about giving points to the RSI if it's above a certain level. I mean, obviously if it's up this high, then it's already up to a high amount. We probably don't want to buy there with our indicator. We don't want to give these points to signal a buy. So what we're going to do is we're going to have a limit that we're going to go under. Now we're going to start with, I believe it was 35 I used in my testing. Let me double check that. Yes. So we're going to look at only candles that have RSI under 35. And how do we do that? So it's actually really simple how we calculate these points. And what I'm going to do, typed on the wrong page. What we're going to do is we are actually going to give 1 point for every value the RSI is below 35. So for example, if we're looking here and the value is 23, if it rounded it to 23, if it rounded down to 23, that would be worth 12 points because it is 12 below 35. Likewise, if this rounded down to 20, it would be worth 15 points here because it is down at a 20, 15 below 35. Let's go ahead and type that in. Now we're going to check. We have to have the RSI below 35. At 35, it should be worth 0. And we need to have, no wait, I think that's all we need for right now. Excuse me. I was getting a little bit confused in my code. So if it is below 35, then the value we want to return is 35 minus the RSI. So if the RSI, like I said, was 20, rounded down on this particular candle that we're looking at, 35 minus that 20 would leave us with 15 points. So that means the lower the RSI is, the more points we're giving to our particular indicator here to show us when to buy. You know, it's not going to be ideal when we plot everything out, and you'll see that, but I hope by now you're kind of getting the idea of what we're trying to do here. We're trying to give us some confidence values on the indicators that we're looking at and plot that on the chart so that we can see when we're most confident on making a decision on what to do. So if it is not below 35, it obviously needs to return 0. So now we have all of our points. What do we need to do with our points? Well, quite frankly, we just need to total the points up. So we would go to make a new variable, total points, set it equal to is green points plus SMA points plus our RSI points. Now we have our total number of points. Let's also plot our points. Fix this comment. All right. So we have RSI. I'm actually going to leave that on there for now. Let's plot our total points and set the color equal to color dot yellow because we have a blue RSI already. Save that. You can see it applied the changes to the chart. Now, what you're looking at on the yellow line is our total points for each particular candle based on the settings that we gave it. Now, we'll go ahead and look in depth at one in just a moment, just to make sure the calculations add up. But you can see with the RSI, once it got really low here, below 35, there was kind of a mirror effect on the point system, because as RSI went below 35, it popped up in reflection to the moves that were happening there. So let's go ahead and take the RSI off, because that might be a bit confusing, and it kind of changes the scale that we're working with. Now we can see something that looks a lot more like the actual point system. It's not really flat looking like it was in the previous picture, but you can see there are high points. So when the price dipped low here, you got more points than before. And let's actually take a look at this particular one. We do not have a green candle, so we should get 0 points for that. It's below the 50 period. All right, so it has 0 points, and it has 14.71 points. That means the RSI was 14.71 points below 35. So what's that? 20.29. Let me add the RSI indicator back on here. Actually, let me add mine back on here, the smooth RSI. Takes a second to load. And let's see, it was this one, and the value was 20.29. So that's exactly what we would have expected based on our point system. So you can see now, the entire concept of this is you can apply points in a weighted value based on where the indicators you're wanting to use are. And in order to do that, you can combine multiple indicators. Now, we just used really the RSI and the SMA here. The SMA was just a trend, but the RSI we actually used to indeed weight it. So in the next video, I'm going to add another indicator on it. And let's see, we're going to... Yes, we are going to add another indicator on it. And I think that is about it, because we're going to cover an indicator that we haven't done. So we're going to add one more indicator in here, and then we are going to take a look at a different condition that we can use to add more points. So for example, with the RSI, we covered, you know, if it's in a positive trend, but there's different things you can do with a simple moving average other than just look at whether it's going up or down. I'll take a look at something like that. And then in the last video, I believe there's just going to be 3 videos for the scoring development. And the last video, we're going to take a look at loops in PineScript, and we're actually going to try and find those periods where there could be that divergence with the RSI, and to help score our system a little bit better. Now, it's not going to be perfect. No, I don't think anything is going to be perfect, but we're going to be able to apply more points further in as the price goes down, and I'll show you exactly how we do that in those videos. But I appreciate you watching. The source code for this is going to be posted on my TradingView profile on the scripts. You can see that my profile is set to the username BigBits IO. There's a link to it in the description. We are going to be posting that script here eventually. I want to finish it, complete it. I want to get the inputs down really nicely so you have a lot of great options. You can actually come up with your own settings for it and find the most optimal one for you. But for now, I think that does it for the video. If you like the video, please leave a like. If you like these types of videos, please subscribe. That really helps me a lot. And of course, have a nice day. Thank you. Hey, this is David for BigBits, and in this video we're going to take a look at coding with Unix timestamps in our PineScript indicators. And the big indicator that I've created with this is the Bitcoin circulating supply overlay. You can see that here. I believe it's the only circulating supply indicator on TradingView. At least when I search it, that's what it appears to be. So take another look here. Yeah, so it looks like it's the only one that's out there. I think if you search for Bitcoin, there's some similar thing, number of coins. It's not open source though. And really, I think this is going to be good going forward because it's calculated on the estimated block rewards per day with the estimated upcoming halving date. So it's really cool. I'm going to show you how to do this, but first I want to show you a few different things. This, of course, is the supply over time. This was during the halving period of 50, the initial halving period. The second period was 25 Bitcoin block rewards, and the third was 12.5. And I've got this chart pulled up. Where is it? Right here. And it tells you how many Bitcoin were created per block and how many were created during that halving period. This is a really good chart. This is a URL. I definitely recommend you check it out if you're interested in the halving schedule and the effect of the block reward history. But anyway, back to the chart. This, of course, is a circulating supply. I added a few options. I'll go over those really quick. We also have a log reduced supply. You can see that really reduced those numbers and actually put it on a scale similar to the price, and I'll show you how I did that in a little bit as well. And then there's also the market cap, and these actually look a little bit better on log scale because the market cap's in the billions. Yeah, you can see it follows along pretty nicely with the price, but it's also adjusted based on how many coins are actually out on the network being used. And while I've got it on log scale, before I get into the code, I want to show you the log reduced supply. And this actually appears to have done a pretty good job of calling the market top during the last couple of cycles. Now, I will let you know, I don't think this is going to work for a long time because the next log reduced supply after the next halving is 182,000. So, somewhere up here. But if we continue to reduce with this log scale as I have for the past two halvings, then eventually we won't be able to reduce it anymore, and we'll just be multiplying that supply by 1. And since there's a maximum of 21 million coins, that means eventually the price of Bitcoin could get up to 21 million. And that's just absurd to think about, and likely, very, very likely, is not going to happen. So it seems more likely we might have to change the log reduction schedule just a bit off of this tenfold amount in the future. That's something to keep in mind. But let's look at the actual code. That's probably what you came here for. This is a development series. Let me take myself out of the video now so you can see the code. And we are going to be working with timestamps, functions, and of course our string options in our input here. Now, as always, you can find this on my TradingView profile, or as I showed you before, you can just search for it. But let's go ahead and take a look. We've created a few functions. The first is circulating supply, log reduction, and a multiplier. And then we only have one simple line for plot. I left it as a blue line. People can change it however they want to. There's nothing else going on here, so it didn't need to have a special style to it, in my opinion. So for the circulating supply, and this is where a lot of the hard work came into, we had to first determine where we are, like what halving period are we in. So if we are before the Genesis date, which it happens to be today, 11 years ago, that would mean there were no coins circulating. So we would have to return 0. Now, if that is not the current schedule, we are in the first halving period, which is a time greater than January 3rd of 2009 when it started, or greater than or equal to, excuse me, but also less than the very first halving date of November 28th, 2012. And I got those dates from this particular picture here, and let's look at the reference here, the timestamps. return a Unix time of the specified date and time. So what we're doing is we're passing into this this function, this timestamp function, a particular date with also, I believe those are hours and minutes, and it converts those into a Unix time. And if you're not familiar, Unix time, if I recall correctly, is I think it's like the number of seconds since a certain date in like 1971. It's a really large integer number right now, so it only gets larger and larger, and it doesn't return a typical like data type that you would work with in other languages like C#. So that's something to keep in mind. We're actually working with a very large integer here. So when we call this function and we get our date back, it's actually giving us just one really long number. So we have to account for that. So if we are in this first halving period, which is these numbers back here, and the history for BLX doesn't go back that far, so we don't see it start at 0. We only see it as of the day that their history starts, and the supply was like, let's see, 40. Oh, that's the log reduced supply, excuse me. The supply itself, let's go back here. Something like 4 million had already been generated at that time. So we reduced it by quite a bit to get on the same schedule as we were down here. But the thing we do to get this number of 4 million, first we start off with the end amount from this halving. So we know at the end of the first halving, let me go back to the log reduced supply because it's a lot easier to see when the halvings occur on that chart. The first halving occurs here, and we know at the end of the first halving there should be 10.5 million coins, and that's based on the Bitcoin algorithm for the block rewards, and you can see that's on the chart here. This is how many Bitcoins are rewarded during this particular schedule, and then of course there were 5.2 in the next one, 2.6 in the next one, and 1.3 going forward, and it keeps reducing as the rewards reduce as well. So we start off with the number that we know that we need. Then we get the date of the next halving, and we put it into this timestamp function, which is going to give us a really huge number back, and we divide that by 86,400,000. That's because that's how many units, not Unix, but how many units make up a single day in a Unix time. Like I said, it's a really long integer, so every day worth of time in a Unix timestamp is 86.4 million. So when we divide the timestamp by that amount, we get the number of days in Unix. Then we can subtract the current date using that same timestamp function divided by 86.4 million to get the Unix days, and we can see how far back from the upcoming halving, which we passed in here, we currently are. So if we're only 1 day back, we're just right here, or if we're a couple hundred days back, we're back here. So then, not only do we have to take that into concern, we have to look and we have to add in the rewards over time. So to do that, we multiply that difference that we've gotten. And we've already gotten our difference here, and we know the block rewards that we're getting for this entire first block halving. Then we divide that as it loads. We divide that by the total number of days in the halving period. So we get how many days back we are. All right, so if we're 100 days back, this number would be 100. And then we multiply the entire batch of block rewards during this halving period by the number of days in the halving period. Okay, that gives us the amount of Bitcoin rewarded per day during this particular period. Now we have that number. We have 10.5 million times the daily reward, or well, let's say this. We have the daily reward times the number of days before the next halving. Okay? So we get all the rewards until the next halving, and then we take the amount of coins on the next halving and we subtract the amount of coins that we have left until the next halving, and that's how we get this increasing amount over time. It sounds like a lot, and there's a lot going on this particular line of code, so it can be a bit intimidating if you aren't a very experienced programmer. So not much I can do about that, but if you follow along, you'll see how these things work. And I do want to point this out. Some of you might just skip to this video. This first part here is a condition, and then it checks if it's true, and if it is, it returns this value. Otherwise, it'll return the next value in the line. And we just kind of cascade those down at the end of each line. You can see, well, if that wasn't it, then check this. If that's not it, check this. And then, of course, it'll default to nothing, of course, if we are after the next halving date, and that's when I'll have to hard code in a bit more information. Particularly, it's going to be the expected total block rewards and the block rewards per this halving. And once we get that information, we can toss this into this particular indicator and then find the next estimated halving date, and we'll be done. And that's all we really have to do to update the circulating supply over time. Now, I did mention earlier on this could be used. I'm going to bring myself back into the video now. I did mention earlier on this could be used for other cryptocurrencies that we know the halving periods and the reward schedules very clearly. This most likely would be best for, I think Litecoin or other Bitcoin forks like Bitcoin Cash, something like that, where we know the reward schedule ahead of time. We can actually do this, and it doesn't have to be based on the same schedule as Bitcoin. It doesn't have to be a hard fork of Bitcoin. It can be any schedule, as long as we know what it is and how many rewards come per block and how many blocks are or how many rewards are happening per day. So we can really mold this to any if we wanted to. Now, the log reduction is the other function that we came up with, that I came up with, that I used to fit this to a curve. And during the first halving period, this uses the same timestamp kind of functions that it did up here, but the value we're returning is just the multiplier that we're going to apply to the supply. So during the first halving, we wanted to reduce it quite a bit. I mean, the price was really low back then, so it had to be reduced substantially to make it kind of in line with the prices at that time. So on the log scale, it was 5 decimal places. 0.0001 is what we multiplied the supply by, and then during the next halving period I just multiplied that by 0.001, 0.0001, and then the current halving period 0.001. And I already mentioned during the next one, if I were to apply 0.01, then it would be a line that starts off with 182,000. Which, if it happened to align with the prices peaking during the last market phases, that might be the top. But like I mentioned, it probably won't work, just because eventually that would mean the price would equal the supply, and that's just kind of silly to think about. Now, the other function we have is just for the multiplier. So we've returned our circulating supply when we're going to do our plot down here. And we have different modes, so I did an if-else nested branch here. And if the supply is the mode that we're on, we just multiply the circulating supply by itself, or not by itself, but by 1, so it equals itself. And if that's not the case, then if the mode is the log reduced supply, then for the multiplier, we return back the log reduction, which is this function that would return back the multiplier that we're talking about. And clearly I need to update this. We don't want to multiply it by that much in the future. But when that time comes, I'll get around to doing it. If I don't, please remind me. If you're watching this video in the future and you notice the indicator's broken, please just let me know. But the other one, of course, the last mode is the market cap. And to calculate the market cap at the moment, all you have to do is multiply the current close price on the candle times the estimated supply, and that's the current market cap of Bitcoin. So we took this one indicator and we really turned it into 3 with the different modes. But really a lot of unique things to look at here. The key takeaway, if you're following the series, is how to work with Unix timestamps and how to compare those. And you'll particularly probably want to pay attention to how I divided it by 86.4 million for a day. Now, if you want to work with smaller amounts, you could probably do that. Like if you wanted to work with 1 minute charts, that might be 60 or 6,000 on this scale. I can't remember exactly, but if you take all the seconds in a day, divide this number by all the seconds in a day, and then you'll get what you should divide it for to see it on a single second scale. So just something to keep in mind, that you can do that. And if you have any questions about this one, because I know it's really confusing and it's really hard to look at with all of these functions within this one line, please leave a comment and let me know that you need something here, or you can reach out to me on Twitter or the Discord or any of that stuff. You can find all the links to that in the description for the video. Now, if you like the video or you like the indicator, please like this video, subscribe, that helps a lot. But you can also check out my TradingView profile. You can see it there. You can like the other scripts that I've got, the other ideas that I've had, and that stuff helps as well. But like I said, if you like this video, please leave it a like. And if you like these types of videos, please like or subscribe to the channel, and you'll get to see more like it. We have a lot of great stuff coming out here. I've got several videos planned and some that are already recorded. So that's all for today. Thank you and have a great day. Hey, this is David for BigBits, and in this video we're going to take a look at a new type of indicator that we're going to be covering here, and that is essentially combining multiple indicators, which we've already done. But in this particular indicator, what we're going to do is we're going to create a scoring method, and the indicator is going to use points based on the different indicators we're using to help us determine when a good time to buy might be, or just how confident the signal to buy might be. So to get started, first thing we're going to do, we're actually going to make a new script. So click on the Pine editor. If you don't see it on your chart, it's down here at the bottom. Pull it up, go to New, Blank Indicator Script. We're going to start out with an indicator. This is what you're going to start with here. There's really not much to it. We're just naming the indicator, the study. If you've seen the other videos, you'll know what the study means, and you'll know what plot does as well. But plot pretty obviously just plots whatever you want on the chart. So in this case, if we were to save this indicator and add it to the chart, it would plot the close, which is the current price or the end price of each candle. Now let's go ahead and name this scoring development. Now I'm going to kind of do some live coding today. For this video in particular, mostly because I had a very complex scoring script or indicator that I made, and I realized I need to break it up into smaller segments. So this video is actually going to end up being about 3 videos worth, because there's a few other concepts that we're going to cover that need to be covered in their own video, and we're going to build from this particular indicator that we're starting with today, which is a very simple example of how the scoring is going to work. And then we're going to move into one that's a little bit more complex and go over some other parts of PineScript that's going to help you with other things, and hopefully do some things you haven't really thought of before. So let's go ahead and save this as scoring development. Excellent. Let's name it. Well, actually, let me copy some code over here from my other screen. Just a moment. And we'll just rename this. Copy that. So what we're going to be doing And this particular indicator is we are definitely not going to be plotting the close price. I'm going to go ahead and erase that because we don't need that, at least not yet. What we're going to be doing is we're going to be taking a look at 3 different ways to judge what's going on the chart. So we're going to look at the price. We're going to see if the candle is green or not, because usually if you're looking for a bounce, then you want a green candle. Like I said, this may or may not be a good strategy. We're just getting started here. I just want to show you. So let's pretend that if it's a green candle, it's worth, let's see, 5 points or something like that. And if we have the 50 period SMA, which I have on the chart, if it's moving upward, then we'll give it a few points because we're in an upward trend. Now, the other one that we're going to be doing is the RSI. And what we're going to be taking a look at is we want to give more points for RSI the lower it is. Now, one of the things we're going to cover in the future videos is how do we handle times like this, where you can see on the chart where the RSI bottomed out here, but the price continued to drop even though the RSI went up. Now, you might look at that and call it a divergence, but what you really want to do is you want to quantify that somehow in your scoring, and I think I found a way to kind of help with that. It doesn't necessarily identify it exactly, but the scoring method that I've come up with that I'm going to show you in the last part of the videos for scoring will kind of help you account for the price continuing to go down even though RSI bottomed out a few candles ago. But for now, we're just going to focus on trying to capture a low RSI as a more valuable point, and in that case means it's going to be worth more points on our indicator. So what we're going to do is we're actually going to build an indicator kind of like our RSI model here, except it's not going to bounce between 0 and 100 like RSI. It's going to be on its own chart here. That's why the overlay is set to false, and it is going to range from 0 to whatever number of points it adds up to. So it could add up to 10 points. It could add up to 1,000,000 points. It just keeping things relative in scale. All right. So now that I've explained everything, and hopefully you're still watching the video, I know I normally show you an example. That's why I said these videos are going to be a bit different. So let's go ahead and start by calculating our RSI, and we'll name this RSI. Set the RSI set to the close value for a 14 period. That's default. Now I'm not putting in the inputs right now like we have in the past, and that's basically just because this is the first one. And it doesn't really matter if it's hard-coded. We're just doing this for an example. Now, the other thing we want to do is we wanted to check for if it was a green candle or not. So we'll name this one is green. And I actually need to go back and change these. And we're going to use a condition, which is the parentheses. If you compare 2 values within the parentheses, it's condition. It's going to return true or false. So we're going to set is green to true or false by comparing the close, making sure it is greater than the open. So let me go back. I want to rename these. I hate working with lowercase. It's just something I've gotten used to. I typically capitalize all acronyms and use camel case with my other variables. So after we get that, we also wanted to look at our SMA 50 period. And make sure these comments match. All right. We'll call this SMA, and then we will call the SMA built-in function with the close with the 50 period. So now we have our values, and let's actually go ahead and plot these. Plot the RSI. We're not going to plot is green, and we'll also plot the SMA. The reason I'm going to plot is green is because it's a true or false. It might show a 1 or a 0, but I haven't even tried plotting a Boolean value on here before. So we'll just save this. Oh yeah, I need to capitalize those. My apologies. That's part of the fun of doing this kind of live coding. Even though this is a recorded video, I am not going to go back and edit this stuff out. That's too much work. Alright, that's been saved. Let's add it to the chart. Okay, so you can see our SMA up here. That's following along with this value. Of course, it's not on that chart because we set the overlay equal to false. Now the RSI is down here, and you can see it's this number. And let's go to the last candle here. It's 46.06, and on the smooth RSI right here, you'll notice it's also 46.06. So it's the same calculation that we're using there. Now that we know that, I'm going to go ahead and get rid of that RSI. We're going to quit plotting the simple moving average just because it throws things way out of scale. And now we can see the RSI. Now, the first thing we're going to do is we're going to start coming up with our points. Now, the first thing we're going to score is going to be if the candle is green. So let's call this one is green points. And let's set that equal to, we got to do a condition here, is green. So if it is a green candle, then we are going to give it, let's see, how many points did we say? I think I said 5. Let's just do 3. And if it's not green, then we're not going to give it any points. That's fair enough. So if you haven't seen my videos before, this is checking this condition, and if it's true, it returns this value. If it's false, it returns this one. We're setting that value here. Okay. Go on to the next one. First, let me go ahead and add some notes here. Green points. We'll do the SMA points now. And we're going to have a condition here to check whether the current SMA is greater than the previous SMA. And I've covered this in the past in one of the most recent videos, and that is we are working with an array. The simple moving average is a series of data. You can see it on the chart here. In order to access the previous values back here, when we're looking at the calculated values, we have to supply it an index number to go backwards. So the current candle is always index base 0. That's the way arrays work. So if we want to go back one candle, we have to say we're going to use the SMA 1 in the array. That's the first one back. So that's how we get the value of the previous one. So to know if the SMA is moving upwards, we have to check if the current SMA was above the previous SMA one period back. It's pretty simple. So once we check that condition, if it is true, we'll give it another 3 points. If it is false, we'll give it 0. So now we have points for our green candle. We have points for a upward moving trend. Now the interesting part is really capturing the value of the RSI. So we don't really care about giving points to the RSI if it's above a certain level. I mean, obviously, if it's up this high, then it's already up to a high amount. We probably don't want to buy there with our indicator. We don't want to give these points to signal a buy. So what we're going to do is we're going to have a limit that we're going to go under. Now we're going to start with, I believe it was 35 I used in my testing. Let me double check that. Yes. So we're going to look at only candles that have RSI under 35. And how do we do that? So it's actually really simple how we calculate these points. And what I'm going to do, typed on the wrong page. What we're going to do is we are actually going to give 1 point for every value the RSI is below 35. So for example, if we're looking here and the value is 23, if it rounded it to 23, if it rounded down to 23, that would be worth 12 points because it is 12 below 35. Likewise, if this rounded down to 20, it would be worth 15 points here because it is down at a 20, 15 below 35. Let's go ahead and type that in. Now we're going to check. We have to have the RSI below 35. At 35, it should be worth 0. And we need to have, no wait, I think that's all we need for right now. Excuse me. I was getting a little bit confused with my code. So if it is below 35, then the value we want to return is 35 minus the RSI. So if the RSI, like I said, was 20, rounded down on this particular candle that we're looking at, 35 minus that 20 would leave us with 15 points. So that means the lower the RSI is, the more points we're giving to our particular indicator here to show us when to buy. You know, it's not going to be ideal when we plot everything out, and you'll see that. But I hope by now you're kind of getting the idea of what we're trying to do here. We're trying to give us some confidence values on the indicators that we're looking at and plot that on the chart so that we can see when we're most confident on making a decision on what to do. So if it is not below 35, it obviously needs to return 0. So now we have all of our points. What do we need to do with our points? Well, quite frankly, we just need to total the points up. So we would go to make a new variable, total points, set it equal to is green points plus SMA points plus our RSI points. Now we have our total number of points. Let's also plot our points. Fix this comment. All right. So we have RSI. I'm actually going to leave that on there for now. Let's plot our total points and set the color equal to color dot yellow because we have a blue RSI already. Save that. You can see it applied the changes to the chart. Now, what you're looking at on the yellow line is our total points for each particular candle based on the settings that we gave it. Now, we'll go ahead and look in depth at one in just a moment, just to make sure the calculations add up. But you can see with the RSI, once it got really low here, below 35, there was kind of a mirror effect on the point system because as RSI went below 35, it popped up in reflection to the moves that were happening there. So let's go ahead and take the RSI off because that might be a bit confusing and it kind of changes the scale that we're working with. Now we can see something that looks a lot more like the actual point system. It's not really flat looking like it was in the previous picture, but you can see there are high points. So when the price dipped low here, you got more points than before. And let's actually take a look at this particular one. We do not have a green candle, so we should get 0 points for that. It's below the 50 period. All right, so it has 0 points, and it has 14.71 points. That means the RSI was 14.71 points below 35. So what's that? 20.29. Let me add the RSI indicator back on here. Actually, let me add mine back on here, the smooth RSI. Takes a second to load. And let's see, it was this one, and the value was 20.29. So that's exactly what we would have expected based on our point system. So you can see now, the entire concept of this is you can apply points in a weighted value based on where the indicators you're wanting to use are. And in order to do that, you can combine multiple indicators. Now, we just used really the RSI and the SMA here. The SMA was just a trend, but the RSI we actually used to indeed weight it. So in the next video, I'm going to add another indicator on it. And let's see, we're going to... Yes, we are going to add another indicator on it. And I think that is about it because we're going to cover an indicator that we haven't done. So we're going to add one more indicator in here. And then we are going to take a look at a different condition that we can use to add more points. So for example, with the RSI, we covered, you know, if it's in a positive trend, but there's different things you can do with a simple moving average other than just look at whether it's going up or down. I'll take a look at something like that. And then in the last video, I believe there's just going to be 3 videos for the scoring development. And the last video, we're going to take a look at loops in PineScript, and we're actually going to try and find those periods where there could be that divergence with the RSI and to help score our system a little bit better. Now, it's not going to be perfect. I don't think anything is going to be perfect, but we're going to be able to apply more points further in as the price goes down, and I'll show you exactly how we do that in those videos. But I appreciate you watching. The source code for this is going to be posted on my TradingView profile on the scripts. You can see that my profile is set to the username BigBits IO. There's a link to it in the description. We are going to be posting that script here eventually. I want to finish it, complete it. I want to get the inputs down really nicely so you have a lot of great options. You can actually come up with your own settings for it and find the most optimal one for you. But for now, I think that does it for the video. If you like the video, please leave a like. If you like these types of videos, please subscribe. That really helps me a lot. And of course, have a nice day. Thank you. Hey, this is David for BigBits, and in this video we're going to kind of continue off where we were last time. I haven't made any changes since the last video. I'm actually recording it immediately after the last video, so hopefully nothing has actually changed. What we're going to do in this video is we're going to continue working with our scoring model, and we're going to add a new indicator to the scoring, but we are also going to be adding another condition, another way to add points, just to show you that there's more than one way to do this in a single time. You could also use functions, but we're just going to do it all in line. It's going to be pretty simple. Hopefully you can follow along and keep up, and eventually this will all be posted on my TradingView profile. And stick around and you can get more information on that at the end of the video. Now, first thing I want to do is actually kind of clean this up a little bit. I'm going to essentially name this region of code indicators. I don't like all these line breaks, these empty lines I should say. And what we're going to do is we're actually going to go ahead and add our new indicator. I want to use the stochastic indicator, and to do that we're actually going to need 3 different variables to save that information. We're going to need the stochastic, and that is going to be set to another built-in function. And we have to pass in the following parameters. Now, if you're not familiar with stochastic, there's plenty of information out there on that, on how the calculation is done. I believe there's even a TradingView wiki post on it. I'm sure you can check Wikipedia as well for how the stochastic is calculated. But in order to match what's on the TradingView indicators, we need to use the calculation just like this. And we're going to use built-in inputs, hard-coded values for the settings for it. So we need to also have the stochastic D, and that is going to be a simple moving average of the stochastic. Let me double check that. Yes, that is correct. And then we also have stochastic K, and these might be referred as different things on different indicators or different versions. Excuse me, different versions of the stochastic. But this is actually, I got that backwards. I believe K should be the fast one, and D should be the slow one. My apologies about that. So that's how I believe that they are done. If it's not how you're used to, then I apologize. But that's how we're going to look at things. Now, let's go ahead and plot these values as well so that we can see what we're going to be getting into. Well, we don't need to plot the stochastic itself. We just need to plot the stochastic K and the stochastic D. All right. Let's go ahead and save that. Oh, no. What did I mess up? Oh, of course, I didn't give it a value. There we go. Hopefully that takes care of it. And it did. So let's go back to our indicators. Let's look at the built-ins. Let's use the stochastic that's built in. This is on TradingView. This is their built-in value. Let's skip to the end here. Make sure our numbers match. And 63.15 on our indicator and 63.15 on the stochastic. You can see those values that I'm talking about here, and here, that's where they matched. We'll go back to the end. You can see 63.15 again. And the next number over is also 44.96 on both. So our K and our D are correct. The fast line, which is the blue line on the TradingView, is the one we call the K. And the slow line, which is just a simple moving average of the fast line, is the orange line on the built-in here. So I'm actually going to leave that up here because that might make a little bit more sense later on. Let's go ahead and remove those plots since we know those values work. And we're going to create another batch of points for this. Call that the stock points. And let's do the same thing that we did with the RSI. Now, if you haven't watched the previous video, I really recommend you should, because it's going to make this whole thing make a lot more sense, I believe. I know it's a little bit longer than normal, but you'll kind of understand the concept a lot better if you're kind of having a hard time with this particular video. Now, once we add this indicator, now we can add the points to it, and what we're going to be doing is exactly what we did with the RSI, except we're going to have a little twist. Now, the RSI, we gave it 1 point for every point it was below 35. If we did that with stochastic, you can see we did that. It would have been worth more points the further it went down. Excuse me, I lost my train of thought there for a moment. Anyway, as it goes down, it's going to be worth more points. Now, I said there'd be a twist on it. I think that's actually in the next video. I apologize. I kind of get ahead of myself here. There's a lot of really cool stuff going on in this one. So let's look at the stochastic K, which is the fast one. We want to give it points as soon as it goes below this value. We're going to keep this value at 35. So if the stochastic K goes below 35, we're going to return 1 point for every point that indicator is below it. So do 35 minus the stochastic K. All right, excellent. And if it is not below the stochastic K, we're going to return 0 points. Now we need to make sure we add these new points into our total points. Very good. And let's save that. Now you can notice things look a little bit different. The values go considerably higher compared to what they were before. Let's take a look when the stochastic gets really low here. All right, so we can see where are we below 35 on this particular candle here. All right, stochastic K, which is the blue line, is 8.17, so 35 minus the 8.17, what's that leave it at? 26.83. All right, so it's going to at least be 26.83, even if the RSI isn't that low. So yeah, and it's a green candle. So that was give us 3 more. So you kind of get the idea. It's worth more points the lower it goes. And of course the RSI is lower. Let's go ahead and add the RSI because it's going to help make things look a little bit better. Let me go to my scripts actually. Add that one back in. All right, excellent. So on that candle, the RSI was not below 35, so it gave us 0 points. The blue line on the stochastic RSI should have given us 26.83. Now you can see the on this value, I want you to pay attention to this number here. When I put it back on that particular candle, you'll notice it ends in 0.83, so that means we calculated the last 2 numbers correctly. And if I'm wrong on the 26, maybe it should be 27. I'm not entirely sure, but we're going to add no, 26 is correct. So we're going to add 3 points because this one, let's zoom in even further here because it's getting kind of hard to see. It was a green candle, so that was 3 points. So 26.83 plus 3 is 29.83. So how did it get 3 more points? Well, the SMA was moving up. You'll notice the SMA value is up here. Right now it's in A, but let's see where we were. We were right here. All right, it's 85.59. If it was below that on the previous candle, it should have added 3 more points because it was trending up. And it was. It went up 6 from that candle to this one. So we got 3 points for that, 3 points for being a green candle, no points for the RSI being below 35, and we got 26.83 for being below the stochastic value of 35. So hopefully you're able to follow along with all that. It shouldn't be too much if you watch the first video. But if it is, please let me know in the comments, and if you have any questions, I can answer those for you. But essentially, we're just giving more points to our new indicator the lower the stochastic gets. And I'm going to leave the stochastic up there because I'm going to end up using that in the next video. But for now, we're good with the stochastic. We don't really want to do anything else with it in this particular video. Now, one thing I also said I was going to do is we're going to look at multiple ways to add points to the same indicator. Now, in this indicator so far with the simple moving average, what we have done is we have added 3 points to every single candle that the SMA is moving up. So when you're in a long uptrend like this, they're all going to have this kind of base value of 3 points because they're all in this upward trend. Now, one of the things you may want to do is spot when a crossover occurs, and that is well, when the indicator changes directions, I should say. It's similar to a crossover, except it doesn't really cross over in any other lines. What it's actually doing is it is changing directions. So it was going down, so when it changes directions upward, then we will give it more points. Now, with a simple moving average, this may not be the best thing to do. Ideally, I would use a much quicker moving average, but this is all just for an example anyway. So let's go ahead and add that in. Let me take a look at my code I've already got done so I can make sure I do this correctly. I don't want to waste anyone's time here. So we're actually going to add these points onto the existing ones. So we're going to keep it to where there's 3 points if you're in an uptrend, but we're also going to add more bonus points, and there'll be more on that in the next video. But we're going to add bonus points for if it was a crossover candle as well. Now, this is very unlikely to ever happen on a candle that has a lot of points, just because we're looking for low RSI and low stochastic values. So adding these bonus points on one of those candles probably isn't going to occur when the stochastic and the RSI is low. That's just kind of how it's going to work out. But just for the example's sake, let's go ahead. And the first thing we're going to do is we're going to come up with our condition. It's a 2-part condition. And we're going to check if the SMA of the previous candle was less than the SMA of the candle 2 periods back. Now, the reason that's important is we are checking if this candle, its SMA value, is less than this candle's SMA value. So in this instance, that's true because it went down from the second candle back to the first candle back. So that part of the condition would be true there. And now we actually need to check if the current SMA, and I just realized I haven't capitalized any of these, and it's not going to work unless I do that. Let me fix that really quick, and then I'll explain this condition again. All right, so now we need to make sure that the current simple moving average is greater than the previous moving average. And there I go, making it lowercase again. But it makes perfect sense. Your newest candle, oldest candle. Newest candle, oldest candle. And this is how we detect that the SMA changed directions. It was heading down, now it's heading up. And you have to make sure that it moves down here, up here. That's all there is to it. You might also want to look into adding the less than or equals to on one of these sides, or just having the equals to as well on one of these two, just to make sure you catch all the possible options. But chances are it's not going to be equal to in any case. So that's just something I've noticed. And we'll go ahead and take a look. I've put parentheses around these to combine these two conditions just to make sure I see it cleanly. That's just one of my habits with my code. Now, since we've checked both of those conditions as one, they both have to be true. And that means we've checked for our trend change on the simple moving average, so we can give it points. So let's actually give it 5 points for the trend change, and if it's not changed, then we give it 0. Now, this is only going to happen one time whenever the trend changes direction. So if it goes down, then up, it happens. If it continues to go up, it does not continue to give it those bonus points. Let me change these values to match what I have in my example, because I want those to match so everything turns out the same as what I've started working with. Now, we didn't have to change anything with our total points because we're adding this onto our SMA points when we're doing these condition checks. So everything's kind of done in line here. It's completely taken care of. So let's hit save. All right, so you'll notice just kind of out of nowhere here, we have the SMA moving up because we have a random jump in the points here. It's got 15 points. I can tell you just by looking at the chart, the RSI is probably not low enough to qualify for points, and the stochastic definitely is not low enough to qualify for points. Let's zoom in on that particular one if I can find it now. Where was it? Of course, now I'm not going to be able to find it. I think it's this one. I zoom in a little slower. My apologies. Okay. It's got 15 points, and it's got 5 points for being green now. We changed the point values. It's a green candle. It gets 5 points for being a green candle. The SMA points, it gets 5 points for being in an upward trend, the first part of this, but it also gets 5 points because the trend changed. The SMA went from moving down to moving up. So you'll notice in these light gray values, it's going to be really hard to read. So let me see if I can't change this to a different color and give you an idea of what it actually is. Yeah. All right, so now you can see those numbers a lot more clearly in the yellow. On this one, it went from 10,418.88 down to 10,414, and then it went back up to 10,420. So that was our trend change right there. SMA down, then up. And that can happen a lot as the price goes kind of sideways here. So it's just something to keep in mind. That's why I said this probably isn't really ideal. So that pretty much covers it. I've shown you how to add another indicator in here, one that's multiple parts. And then I also showed you how to do extra conditions and give more points on a single indicator if certain things are true with it. Now, that pretty much covers it for this video, but there is one more video, and it's going to cover some really important topics for PineScript. And the first one is the loops. I haven't covered loops yet in any of the videos, but we're going to be looking at loops, and we're going to be using the loops, as I've mentioned in the last video and this one, I believe already, to try and capture these moments where we've already got a lot of points, but the price continues to go down. So what we're going to do is we're going to look back with a loop and see if our price is still going down and continue to add points so that we don't have this huge dip here. And even if we bought as the price continued to go down, as the points accumulated quite high, we would also end up having the points continue to grow as the price continues to drop. And I'll take a look at one way we can do that in the next video, and that's by using the loops. Now, the other thing we're going to take a look at, I believe that's mostly it, but there's also one other thing. We're going to look at self-referencing. So what we're going to do is we're going to keep these points as a base value, and we're going to add bonus points as well by working off of this value. So we're actually going to have two lines on the chart. We're going to have our base points, and then we're going to add a second line that's bonus points, and just kind of show you what's going on, where we're getting more points for the price, or for our points to have stayed at a high level for a long period of time. That's essentially all there is here. And that's it for the video. Thank you. If you like the video, please leave a like. If you like these types of videos, please subscribe, especially because you're going to want to see the next video. We are going to publish this code once it's complete onto my TradingView profile under the script section. I already have quite a few. We have quite a few followers and likes already. This stuff's still growing, so please check it out. If you haven't already, go on and follow me there so you can see when this particular indicator is going to be published. Now keep in mind, this is all, this indicator is just a complete sample. It's just an example of what we're going to do, and even when it's posted, you're going to have to apply your own indicators to it, and if you need help with that, you can feel free to ask me questions. But that's it for now, and thank you and have a nice day. Hey, this is David for BigBits, and this is going to be our third video in the scoring development, and I plan on this to be the final video in the scoring development kind of mini series within our big series here. And what we're going to be doing is we're going to be adding loops, and we are also going to be adding some bonus points to our chart based on its current values. Now, the reason we're using loops, and I've mentioned this in the past videos, if you haven't seen those, please go back and at least watch the last two videos so that you're aware of everything that's going on. I know they're a little bit longer than my normal videos, but this is a pretty big topic overall to cover, and there's a lot of big things going on inside of it that are important to understand, especially loops here. So what we're trying to do with these loops is we're trying to loop back through the previous candles and try and catch this trend where the price is going lower and award it more points as it goes on. That way we don't get the best signal back here, we get it closer to the bottom. Now in order to do that, what we're going to do is we're going to have to create a new value here, make a section for our indicator bonuses. And let's make one for the RSI. And I made this a float value because I got some errors when I tried to do this before, and it needed a data type associated to it. So in order to do a loop in PineScript, it's similar to a C# loop if you've done those, but we're going to be using their standard format for the for loop, and it's like this. So if you wanted to loop from 1 to 10, you would make your loop like this. You would want to have 4 spaces on the next line. Code goes here, and that would take care of your for loop. Now if you wanted to break out of your for loop at any point, you would just use the break keyword, and I used a semicolon because I'm used to that with C#. Now, for us to be able to go back and loop back or look at the candles in the past, then what we need to do is we actually need to use a negative number. So if we start at 1, it's not going to work. So I'm going to show you how this works, and we're going to add points to it, and hopefully it all makes sense at the end. Now what I used was I wanted to go back 7 candles. So let's pretend we're looking back here at this huge dip, and we're on this particular candle, and we want to look back 7 candles around here, and we want to see where our RSI was at that particular time. Now to do that, of course, we need to go back 7 candles, and the reason I wanted to start with the -7 is because I want the highest or the furthest candle back first. Now if I wanted the first candle first, that's easy. I just start with 1 and go backwards. But what I want is I want to start with the farthest candle back first and then get closer. Now I'll set that to -1, and we'll go up by 1. Now that's going to do is that's going to set us 7 candles behind, and each iteration through the loop is going to go up by 1. So it's going to go 1 candle to -6, -5, 4, 3, 2, 1 until we get to the current candle. So how are we going to give it bonus points? Well, first thing we need to do is we're not going to give it bonus points unless its RSI is less than 35. And because that's where we did with the actual points up here, we had to make sure that the RSI was less than 35. Why would we give it bonus points if it wasn't already less than 35 as well? We want to see that the RSI is still below those numbers. So let's go back to our RSI. So in this particular instance, let me make this the whole screen here. So once it dips below 35, we want to continue adding more and more points the further below 35 it is. So not only do you get the points for how far below 35 it is, you're also going to start getting more and more points added on the lower it is. And these are going to be cumulative. So the farther back it stays underneath of that, the more points you continue to get. So we're under 35. Now, how do we check? Well, that's for the current RSI, and I apologize. I should have done this when I started typing it a minute ago. We want to get that candle back, but if we just pass in I, it's going to be -7. It's a zero-based index that only goes into positive integers, so that's not going to work. We're going to have to call the absolute value of I. So it'll convert that -7 on the first iteration to an actual 7, and it'll go back those 7 candles to the 8th candle back. Now, this is how we look back in the past. We're looking now at the 7th candle back, making sure it's below the 35 value RSI, and to make sure that this is still valid. So to make sure we didn't have a huge jump in the RSI and the price jumped along with it, we also want to make sure that the price continued to go down. So what we're going to check is we're going to check to make sure that the current close is actually less than the close I periods back. So we're not only are we checking that the RSI back here, if it was below 35, but we're also checking that the close in the price was below that as well. So it just kind of confirms that we're giving this bonus points because the price continued to drop, even though we were correct in noting that it should have been worth points below 35. So let's go ahead and continue here. We're working with our if statement. We need to give it another 4 spaces. I believe that was correct. And now we are going to use our RSI bonus value, and we are going to set it equal to, now to reference the value outside of the if statement, we have to use this colon equals, and you would have known that if you had watched the other videos so far. It's way back in one of the earlier videos where I covered the if statements. Now, I believe we also covered functions with those as well, but for this, we're going to set our RSI bonus. Now, we also need to include its bonus already so that it's cumulative. And then we're also going to add on top of that the value of the current candle back. Now, I on the first iteration is -7. So with the absolute value of that, it'll make it 7. So if it's true on the very first candle that our current price is below that candle's price, which it appears to be, and the RSI is below 35, which it appears to be, it'll give us 7 points. Now in the next candle, if one of those conditions weren't true, it just wouldn't add any points, but we would still have 7 bonus points for the current candle. And then it continues on, and as the price continued to drop, those points continue to accumulate as a bonus for the current candle. So that means your points are going to continue to go up. Now they may fluctuate a bit, but for the most part they're going to continue to go up. Now there's ways we can take care of averaging that out, but for now, we're still just doing an example. So hopefully this will make more sense how it is. Now we don't need this break line here. And with our total points, we also need to add in now our RSI bonus. Now, I've already gotten the code for the stochastic. It's the exact same code, just for the stochastic. Excuse me, just for the stochastic. And I'm going to paste that in here, but I need to fix the capitalization because I was kind of lazy earlier and I did not do it correctly. Give me just a moment. This will be a lot quicker than if we did this with live coding, excuse me. Or, yeah. If we had coded this all again, we would have had to have done this anyway, but we're saving a little bit of time by not having to type all the conditions and stuff. Got that. Now let's add those stochastic bonus points in on our total points as well. Save it, and you'll notice there'll be a lot more points here if I did it correctly. I also wanted to use this stochastic D, and of course I did not capitalize all of those. My apologies. Thank you for holding on and waiting right now. It's hard to keep up with all of these different variables between everything that I'm working on. Okay, I believe that has it. And actually, what I wanted to do was I wanted to use the stochastic D. Now, the reason I wanted to use the stochastic D is because it's a little bit slower and it'll stay at a lower level longer. And if we're trying to catch that drop, even if it continues to go up on the K, the D will still be lower. So that's one of the reasons I wanted that one. Now, let me see. Of course, I referenced it wrong still here. The joys of live coding. Okay, that took care of that. So you can see our value is actually a lot higher here now. But how do we make that even higher? Because it looks like it's still even lower point values than that, and it's hardly any higher than that. And there was a dip in between here. But honestly, it wasn't a terrible time to buy anytime it got below, or it got above a certain point here. They seem like decent times to buy. Going back, you can check. They're actually pretty decent. Of course, that was during a bear market, but it did correctly kind of call an uptrend there. Small one there. It's a very good one here. That one probably wasn't high enough. Those probably weren't high enough. But you get the idea. It's kind of helping you here by combining all of these different points together based on your confidence value. The lower those values are, the more points they're worth. And looking back and accumulating all those previous points, it starts making a difference. And you can see these points are adding up to a value that's going to be helpful. And you can imagine a scenario where you have different indicators that you're more familiar with, that you know how the points should be weighted, and how you can come up with a scoring system to work for you. And that's what this little mini series is all about here with the scoring development, is kind of help you with your own point system if you want to do something like that. Now, another idea that I came up with when I was doing this was to use these points that we've come up with similarly to how we used our stochastic and our RSI bonus to reward the candles that have higher points cumulatively, like we did with the price drop. So if the price continues to drop and we had high values before, why should we continue to not add points to them? The farther you go along, the more valuable they should be. So just based on our points alone, we're going to add more points on top of it. Now, to do that, we're actually going to have to come up with a new total here. And let's just go ahead and copy this code. Yeah, let's copy that code from the stochastic. And we're going to call this self bonus. Go back and change some of the wording here. And thank you for watching this video. I know it's going on for a while, but hopefully you are learning quite a bit. And we have to reference our total points instead of any specific indicator. Our indicator is our total points that we're using. And we also need to change this from a P to something else because it's already being used in that particular loop, and we also have to change the references to it. Excellent. There we go, and we need to change these as well to the self bonus. Excellent, that's got that. Now we need to plot another total, and that is going to be our total points plus our self bonus. And let's color this one blue. Alright, so let's try and save this. Hopefully it works. Ah, it worked. I don't believe I did this correctly. No. Okay, I know exactly what I did wrong here. But you can see it does apply bonus points, but it's only doing it to the ones below 35. I actually meant to give it bonus points for the ones above 50. 50. Yeah, 55 or 50. So we actually need to change the condition here. We need to make that only give bonus points based on previous candles that were above 50. And now you can see, even though there was that kind of jitter there, it continued to go up as the price continued to go down. Now, you notice there's a huge dip between those. That's going to be kind of hard to avoid because the price did bounce. But in this particular case, maybe you can zoom out on the chart to, say, a 3-day candle, and it makes a little bit more sense. So thank you for watching. Please leave a like if you like the video and subscribe for other videos similar to this. Going forward, we have a lot of different things to cover. I've got a lot of ideas for PineScript, but there's also going to be other video series on smart contracts. I'm going to start sharing some practical examples on those soon, hopefully, if I haven't already by the time this video comes out. And if you want to get the indicator that we've been working on here, I am going to end up adding it to my TradingView profile. That's BigBits IO on TradingView. The link should be in the description for the video. But you can see all the other scripts that I've done and take a look at those. And if you're curious about any of those, I've pretty much made a video for all of them, and you can go back and look at all of those videos. But thank you once again, everyone, and have a nice day. Hey, this is David for BigBits, and in this video we are going to look at a brand new indicator that we've came up with here. This was actually suggested by someone who was following the channel and contacted me through the YouTube comments and also through Discord. So this is called the Binance Bitcoin Alt Ratio Difference, and I'll explain what that means in just a moment. But the reason I'm sharing this one is mainly because it has some pretty interesting use of strings to manipulate the securities. And by that I mean we're able to change what security we're looking at by using strings. And I'll show this to you how it works in just a moment, but I want to show you first the end result here. So with this indicator and what's happening here, we are looking at the Ethereum Bitcoin Alt Ratio Difference right now, and we have the ability to select different securities from the drop down here, and you'll see how that works on the code side in just a moment. So if I change it to Litecoin, it should take a moment and update. Yes, there we go. But it takes a little while to pull the information. And then we also have the ability to use a custom altcoin, and these are all traded on Binance, and they have to have a Bitcoin pair and also a USDT pair, and I'll explain that in just a moment. I'm going to leave it back on Ethereum. Okay, and now we're going to pull up the source code, and I'll kind of explain what the difference, what the alt ratio difference is here. So I'm going to go ahead and go to the actual calculation. The alt difference is just the price in USDT of the altcoin you have selected. So this would be the Ethereum USDT price divided by its price versus Bitcoin. So that is a way to calculate what the price would be if it were priced in terms of its ratio versus Bitcoin. It's not entirely effective for really trying to find any trends. It might be good for some sort of arbitrage opportunities, something like that. I can't really say. The differences are pretty minimal though, but just to show you what we're talking about, let me pull my calculator back over to the side. Let's pull up the Ethereum USDT pair on Binance. All right, it's at 159.92, and let's look at it on Binance here. All right, so we would take our 159.92, and then we would divide that by the current price in Bitcoin, 0.018369, and that gives it its Bitcoin comparative price of 8,705.97. So let's go back to the Bitcoin USDT price, and it's 8,714. So you kind of get an idea of what the indicator is really intended to do. Just kind of see if the ratios versus Bitcoin or USDT are kind of out of whack, and there might be some sort of opportunity in there somewhere. And this was something someone suggested, so if you have any questions on how to actually use this, I don't entirely know, but they requested it, so that's what we're doing here. And of course, if you have any suggestions, please leave a comment below, and of course I'm going to show you at the end where you can get the code for this as well. Now, let's go to the actual important part for the development series. Now that I've shown you the end result of what we're doing here, and also kind of the key parts of how it actually works as far as, you know, the result you see on the screen. What we're really interested in this video, however, is our options that we're using. We're working with strings. I mean, the title of the video is strings and manipulating securities, essentially. So how does that work? Well, we have a drop down for our alt, and you'll notice it's predefined options here in this array are Ethereum, Litecoin, and XRP, and it defaults to the Ethereum in the drop down. You notice that when we pulled it up originally, those are the three options there. Now, we also have a custom alt, which is default value is XLM, but you could change this if you wanted to just by typing in a different alt here. Now, before the indicator will actually use that, you have to check that you are using a custom alt here, and then you can type that in. So you see it changed the calculation to account for Stellar here. Let's change it back to Ethereum, and let's actually take a look at this. So one of the first things I did was I came up with a function that's going to manipulate the strings to give us whatever the alt is, its security, the alt security versus USDT. So we have to, when we're calling the securities, we have to tell it the exchange we're working with, and then we have to give it the trading pair, which would be whatever alt you enter in. And for us to get the USDT price, we also have to follow that up with USDT. And we also made another function, which were covered in previous videos. So if you haven't seen those, please go back and check out in the series how to do that. But we also have the ones where we can just insert the alt into the Binance Bitcoin pair. So all we really have to do is tell it what alt we're working with, and it's going to give us the correct string to look up in our security. Now, you can see here, the first thing we do though, we have to have the Bitcoin price versus USDT. because we use that to compare. And since the whole focus of this indicator is to compare the alt ratio's difference to Bitcoin versus USDT, we have to have that one price no matter what. And we're all using the same resolution on all these. So to get our custom alt or our selected alt that we have in the dropdown, we have to call the security function again. We want to get its close for the resolution, but we're checking to see if we're using a custom. If we aren't using the custom, we use the alt that's defined in that first alt input. Otherwise, we're going to, well, also notice that we're calling the alt USD function, so it's going to return that string from up here with whatever alt string we place in there. So the default option is F. It's going to call this function. It's going to place Ethereum in here, and you're going to return Binance ETH USDT. All right, but if it is custom, then it's going to call that same function, but it's going to use the custom alt that you typed in. So it's a really easy way to kind of manipulate the strings and also manipulate the securities. I'm not sure where it's going to be too useful for you in this, but if you're wanting to quickly cycle through altcoins like this, that might be a good way to do it instead of having to type in all the altcoins that you're wanting to work with. Now, we also did the same thing for the Bitcoin price. We checked to see if we were using a custom one or not, and we called the correct function based on whether it was a custom input or not. Now that we had those, we were able to run our calculation. I already showed you how that worked, but the only other option we had was whether we wanted to show a dollar-based difference or a percentage-based difference. And really, the only other thing we did was we calculated that percentage difference, and we just only showed whichever one was actually selected. So really, that's all there is. If you want to get a hold of the source code, you can always check out my GitHub, but probably the best way for most of you is to actually check out my profile on TradingView, where you can go to the scripts page and you can actually see this indicator here. I just published it earlier, and you can see a little bit more information about it and also have access to the code. Alternatively, you can also just go ahead and add it to your chart. It may not be indexed quite yet. No, it's not quite indexed in the public library just yet. So that'll show up in just a little while, but it'll show up like this in the public library soon enough. If you have any questions, please leave a comment or reach out to me on social media. All the links for these things are available in the description of the video. I also have a brand new tool that I've been using for my website that is posting the transcript of all of these videos along with an embedded video on my website on the blog. So if you wanted to see the transcript and you weren't on YouTube for whatever reason, you can do that there. You can also contact me through the website, many different other things. So a lot of great things coming up. But yeah, if you liked the video, please leave a like. That helps a lot, and so does subscribing, of course. So if you're down there checking out the description, looking for those other links or my TradingView profile, please go ahead and like or subscribe. But otherwise, that's it for right now. Thank you, and have a nice day. Hey, this is David for BigBits, and in this video we're going to go over a function we have not covered yet, and that is the alert condition. And if you've seen the video title, you know what we are going to do is we are going to create a custom alert message. Now, if you're not familiar with alerts in TradingView, you can use them to simply alert you with the pop-up on the screen. They can send you an email, and they can also hook into webhooks. Some people also use alerts for trading bots. There are some extensions. I can't really say anything about those. I don't really know too much about those, but this this particular script was a request by one of the YouTube commenters, and I appreciate that because I haven't really looked into the alert conditions too much, but we've got it figured out, and I'm going to show you exactly how this works. So first of all, as always in the video, I'm going to show you our end result first, especially for those of you who don't know how to make an alert. This might be helpful. First thing you need to do, in particular, we need to add this indicator, and this is on my public scripts. It should be in the public library soon once it gets indexed. And what we're doing is we're adding this indicator, but then we have to add an alert. Okay, you open up the alerts tab here and make sure I'm not in the way on the screen here. Then click here to create a new alert. You can do that, or you can hit the little plus button here. Let's do this one. Now on the condition, it's referring to what indicator or what part of the chart you're looking at. So we want to actually select our custom alert message, the indicator that we're working with here. If you've created your own with this code, you would select whatever you named it and saved it. Now, it'll give us all of the different options for the alert conditions. Now, these are built in. Number 1 and number 2 here are ones that we've created in this particular example, and we're just going to go ahead and select custom RSI. I'm only going to have it show a pop-up. You can see the message that it has set here, and it's going to pop up immediately, well, relatively immediately because of how I've got it set up. We'll go over that later. But once you're ready, make sure you've got everything that you want selected for the actions on the alert. So you can set an expiration time if you needed to, and how often the alert can actually occur. I'm only going to do this once because this is just an example. Let's go ahead and hit create. Should take just a moment, and we should get a pop-up in the middle of the screen. There we go. Our RSI is 55 and a bunch of decimals. And we can look here, it's 55 and a bunch of decimals. So the alert worked. It showed us what the RSI value is. And there's plenty of documentation on how to do this. If you click on create alert, there's a little plus button down here, and if you haven't noticed, you can actually click on that and it can give you more information about the placeholders. And the placeholders are those custom messages that we can put in using the indicators that we've plotted. So if you want to put a custom value in there, you have to plot it on the screen to get it to show up. And they have a bunch of built-in ones such as the exchange, the ticker, the close, volume. Things like that are already built in, whereas the custom values that you want to use, we are going to have to reference their plot using the plot ID. Now, it's very important that you remember that you're using the plot ID, not the plot title or any other combination of possible inputs you could possibly have here. It has to be plot underscore the ID of the plot, and the plot ID is determined by the order in which it's plotted. So now we can actually look at the code, because now I kind of have to explain what that means. What we're going to be looking at is we're just going to be looking at the RSI and just a simple EMA, a 3-period EMA of the RSI. And I have got this set to where it's always going to be true. We're always going to get an alert whenever TradingView processes these alert conditions. And that's just because we're doing this example. And I've made sure to comment in here, remove this line if you're going to copy this code, because this will always make this create the alerts constantly, no matter what you're doing. Ideally, what you would do is something like this, creating a Boolean and assign that true or false based on some sort of conditions. And in this example, it was, I wanted the RSI to be less than 30, the RSI of the previous candle to have been less than 20, but the current RSI is greater than the last RSI. So basically, the RSI was really oversold and it's moving up now. It's a really simple example, but it just kind of gives you an idea of what you can do. You can even compare different indicators, all kinds of stuff. If you want ideas for that stuff, please go back and look at all the other videos in this series so far. We've covered a lot of different stuff, and if you want to combine different indicators, there's a lot of great resources in those videos. Now, we are always going to have an alert, but I told you we need the plot IDs. So the first thing we're going to be doing is we're going to have to plot this information on the chart. Now, we are going to plot our EMA, or exponential moving average, of the RSI first. And we're going to call that the plotted smooth RSI, and it is the blue value on the indicator here. Now, that would be plot ID 0. And I probably should have added this earlier, but that gives you the idea. This is a 0 indexed based array that they're using to do those custom messages when they're looking at the plots. Apparently they add the plots to the chart as an array, and the first plot is 0 indexed, so it starts with 0 when you're trying to reference it. And this would be plot 1 because it is our second one in the 0 based index, so it would be number 1. Now, just to further illustrate that, we're going to call our alert condition. We're going to tell it whether or not it should be triggered, and we have it set to our Boolean value, our alert, from back here. We have it set to true right now, but ideally, like I said, you would have this set to some sort of condition, multiple different parameters that you would use. Maybe you're just looking to see if the price went up from before. Something like that. You need to be watching for whether or not your conditions are true or false, and you place that true or false value here. Then you can create a title. Personally, I like to order those by number so that when you do look at them from the drop down, you can actually have those populated first. I haven't tested this yet, but if you started it with the letter Z, they might show up at the very end of this list. So it's, in my opinion, a good idea to just number them for yourself. Now, like I said, to further illustrate this, plot 1 is our RSI. You can see that here. And you can also see we're referencing plot 1 with the placeholder in the string. Now, you don't concatenate strings here. In the previous video, we concatenated strings in functions so that you could change securities. With the message, if you try to call a function such as toString and the RSI value, it won't let you save the script. So don't waste your time. I tried that plenty of times to figure this out for the first time. And you also can't put in the values themselves. So this is how it has to be done. You have to call the plot. If you wanted to, maybe reference something that you didn't want to show on your indicator, you could actually plot that value and just make it set to its transparency, having a 100 transparency, which means you can't see it on the screen, but it's still being plotted. And you might still be able to interact with it when you hover over it, and you could probably see the values over here on the indicator. But if you didn't want to see it on the indicator, but you still wanted to reference it in the message, you would just create another plot, a plot 2 here, set its transparency to 100 on the plot. You wouldn't be able to see it up here, but you would be able to reference it in your message as plot 2. That's just another example of how you can add more information in here. Now, these don't have to be just the single line, just one different value in here. If you wanted to, you could do multiple placeholders. You could do the RSI is equal to this, then you could do space, current price is equal to the placeholder for the close, and really you can do whatever you want. You can even do calculated values, but like I said, in order to do that, you have to plot those. So that's essentially what the EMA, the first one, is here. That's another calculated value based off of the RSI. So maybe we wanted to see what the absolute value of the MACD was for whatever reason. So if it was a negative number, it would actually be positive now. I mean, you could do that, but you have to plot it first on the screen. I can't iterate that enough. That's the most important thing. And then reference the correct plot ID. And I hope this all makes sense. It's really not that hard once you do it. But like I said, this code is available on my TradingView profile. And you can see that here. There's a link in the description of the video. Go check that out. You can click that, and I'll probably update the code just a little bit with some of those comments I added during the video. But I hope you appreciated the video. If you have any questions, please leave a comment, or if you have any other indicators or functions or anything related to TradingView and PineScript, please leave a comment and let me know what you'd like to see. Otherwise, please like the video, subscribe, all of those things help me quite a bit. And definitely, if you like these videos, you probably do want to subscribe because there are going to be plenty more. There's going to be other video series coming up. Lots of things coming up on the channel. So thank you very much for your time and have a great day. Hey, this is David for BigBits, and in this video we're going to take a look at our fancy moving average indicator that we've been working on. And this indicator is capable of showing us multiple different moving average types, along with many other settings, duration, what resolution chart the moving average is for, and we're going to add another layer onto that. In this particular video, we are going to work with different candle types while looking at a normal candle chart or any type of candles. You can plot a moving average for different types of candles, and by that I mean we're looking at a regular candle chart here, but the moving average in the snapshot is actually for the Heikin Ashi candles, which isn't really a huge difference compared to what they normally would be with the moving average. But what this does show is that you can use this if you are trading based off of those types of candles. You can calculate those indicators from any different chart that you're looking at, and you can always have it use the particular types of candles that you like if you're using something different. So really nothing to it other than to adding a new variable and then using a new function. We're going to continue to work with the security function. Basically, we're going to have our own custom code in every part of that function, and it's going to now call those different functions in each of the three areas in the security. And then with the first part, we are going to give it the ticker ID, but we're going to get the ticker ID based off of a built-in function for the different types of candles that we're working with. So I'll go ahead and show you what we've got. This is our indicator. Let's go ahead and show you a little bit about how it works when we change the candle type. We are using the current candle type, which is just a regular candle type right now. We switch it to the Heikin Ashi, and I probably am butchering the pronunciation there, but that's okay. The Rinko, you can see it's calculating based off of those different candle types, and let's actually leave it on Rinko and let's switch to that particular chart. Okay, you can see why the line was so different. Okay, and if you understand how Rinko candles work, then you'll understand why the line looks so jagged here. It's because they may or may not update as frequently as the candle chart does here. Now that we have that, you've already seen we've got our input here. We've these very different types of candles that we can work with. So the first thing you're going to look at with the code is you're going to be adding a new input, and we're going to have a new set of options. This is just like how we did our resolution. We added in a whole array of different options. We set the default value to the current one, and you can select between the different types of candles. Now, in order to convert these strings, this array of strings, these options, in order to take one of those and have it selected and convert it into what we need, we actually have to use a function to tell what the current value is that we have selected, and then return the correct ticker ID in order to calculate the correct moving average. Now, the reason we have to do that is because we can't call the security function within an if statement or a for loop. I believe the for loop as well, but definitely not in the if statement. And what that does is it kind of creates this constraint to where we have to create a function to return the ticker ID, and then we have to do the security function on its own, okay? I'll show you what I mean by that, but let's go ahead and take a look at the function. You'll notice our other functions here, our moving average, our resolution, and now we have a new one called getTickerID. Now we're passing in the candle type. This is going to be the string that the user selects in the inputs on the candle type. Okay, so with our nested if-else statement here, we're going to first look at the current candle. Of course, we're going to return the current ticker ID. Okay, moving on, this is pretty straightforward. Once you get the hang of it and you look at the reference, the PineScript reference, you can tell what you have available for you. And I just kind of went with the examples that they had. The Hake and a She, this is a built-in function that you use to return the ticker ID for that particular candle type. So we call that function, we pass in the ticker ID. It's going to return this value from this function, and we're going to use that in the security call. You'll notice some of these, like the Renko, well, all the other ones have extra options that you can define. I'm using the values that were provided in the examples in the reference manual. So if you want to change these to whatever you want, you can. I didn't want to have these as inputs here because this would make a very long list. I've put in a request or a suggestion, I should say, to TradingView to be able to create input groups. That way, if we were to select the Renko, we could have inputs for these too, and also I would like conditional inputs to where they would only show up if we selected a specific value. But that isn't there yet, so I'm not even going to bother creating the inputs for it. We're just going to go with the defaults, and that should be good. And like I said, since you're following along and you're coding yourself, you can probably just change those values to whatever you need if you think you need them as something different. Okay, so we've got our function, and really the only other thing that we've changed is the security call. When we are calculating our moving average, we use the security function, and like I said, this can't be within the if statement. Otherwise, I would have created a function called calculate MA, and it would have basically done the same thing. It just would have used the ticker ID. It would have been its own line in each of those. It really would have just saved as one line of code, so it's not a big deal. Anyway, so within our security function, we are calling getTickerID. That's the new function that we've made using our MA candle type, and it's going to return the ticker ID based on whatever function we have selected. Then of course our resolution based on that function that we had, and then finally the moving average, which is the actual moving average calculation based on the values that we passed in for that. So we've come a long way with this particular indicator. I'm trying to think if there's anything else we can add to customize this particular indicator more. If you can think of anything that you would like to see on this one, please let me know, or any other one, please let me know in the comments section on the video. I'd really appreciate that. There's a lot of things we can do here, and if anybody wants any examples of anything, just let me know and I'll try to take a look at them when I get a chance. So that pretty much does it for this video. If you want to actually find this indicator on TradingView, it is available in the public library. Just go to indicators and you can actually just search for fancy moving average. You'll see it available in the public library, and you can actually add it to your chart like that. You can also check out my TradingView profile and go to the scripts section and you'll find it there. You'll find a bunch of information about the particular script, a copy of the source code as well. This one is open source, and you can also check out everything else that I've done, my ideas, my scripts, my followers, all of that different type of information. You can check that all out there. So I appreciate you watching the video. If you've liked it, please leave a like on the video. That helps a lot. Also subscribing, that helps a lot too. But if you like this video, then you probably do want to subscribe, because we do a lot of videos like this where we are giving you development examples and tutorials on PineScript and many other things. So please subscribe if you haven't already. But other than that, thank you and have a nice day. Hey, this is David for BigBits, and in this video we're going to take a look at